future. We came to this world to reach the stars, to shape our future. We came to feel the music.
You're watching TBPN. We are in an undisclosed location, so we will be a little bit quieter with the intro, but it is Friday, September 12th.
Not to yell.
Yes, it hurts. We will be back in the Ultradome soon, don't worry. But today we are still emotionally in the Temple of Technology, the Fortress of Finance, the capital of capital. And we need to kick it off with the level 100 performative tech bro final boss, Peter Diamandis. Are you familiar with Diamandis?
An absolute legend in the game.
Yeah. What is it? Singularity
Podcaster.
University? Yeah. I mean, he has a podcast. He's done a number of businesses, X Prize, I believe, Moonshot stuff. But man, was he early to the Singularity game?
Yeah.
Like he was talking about that with the Kurzweil era.
Yeah.
But the whole reason he's getting called a performative tech bro final boss is because, of course, he is vibe coding on Replit over Starlink,
flying himself up to the Bay Area. The only thing he missed was sleeping on an 8 sleep.
Sleeping on an 8 sleep. He should have had the 8 sleep in there.
You know.
And then he should have had Infinite Jest printed out sitting next to him.
Some type of homegrown, like autonomous flying setup, actually flying the plane.
He should have had a ramp card in display.
That's right.
Time is money. Save both. Easy to use corporate cards, bill payments, accounting, a whole lot more all in one place. Go to ramp.com.
A lot more.
We are, of course, on the road. We've been on the road a lot this week.
We hate being on the road.
It's not our favorite thing. It's very, very rough. We know it changed the show. Hopefully we will get back in the swing of things and kind of bring you the show that you know and love. But
doing our best today.
We're doing our best. Of course, this stream is made possible by Restream, one live stream, 30 plus destinations, multi-stream, and reach your audience wherever they are. And for our gracious hosts, were able to loan us a whiteboard where we were able to piece together exactly what's going on in tech. We're going to take you through the stories today. OpenAI.
Calling this out.
This is exactly
someone's going to spend the next
trying to decipher
3 hours trying to decipher.
They're going to put it together, and
what does it
will
mean?
Understand the real nature of tech, how it all connected.
This is the current state of tech, right?
I like it because there are some connections there, like Amazon and Anthropic. That red line is real.
That's real. The Hamptons and Patek.
Also real.
There's a connection there.
Well, Manitis, we'll leave it up to the viewer. That's an exercise for the viewer to see how he's involved. We didn't get Figma on there. We should have been doing all this on a Fig Jam. You should go to Figma.com. Think bigger, build faster. Figma helps design and development teams build great products together. Get started for free. So the actual big story is that OpenAI, the nonprofit, is going to control its for-profit arm and own equity valued at $100 billion. I believe this will make it the most highly valued nonprofit, or like the most profitable nonprofit in world history, the best funded nonprofit, right? And it is remarkable to think about what that will be like. People have kind of written off the nonprofit as like it's going away. Like it is not going away. Like it will continue to be
incredibly
a thing.
Back.
It's incredibly back. Funded forever, essentially, to do a ton of interesting things. I think we're going to see interesting things about come out of that organization. But anyway, the news. This is from the Journal, and we'll break this down. But Nick has it summarized here. OpenAI LLC will be converted into a Delaware public benefit corporation. OpenAI nonprofit retains control of the new public benefit corporation. The nonprofit will hold $100 billion plus of equity in the public benefit corporation. The PBC structure enables raising large amounts of capital for the mission, which obviously they're already doing. They're still aligned with ensuring AGI benefits all of humanity. I think that's good. I think it's also it's aligned with like your shareholders. Like if you're just a normal C Corp, I know they're a public benefit corporation, but if you're just a normal C Corp, like shareholders are humans. Let's make sure it benefits the shareholders. That will, by definition, benefit humanity. But specifically, they're saying all of humanity. Even if you're not a shareholder, AGI should still benefit you, which is a noble cause. OpenAI and Microsoft signed a non-binding MOU for the next phase of the partnership. A definitive agreement is still being negotiated. OpenAI says it's engaging with California and Delaware State.
As it stands, Microsoft gets 20% of OpenAI's revenue.
And for the big man, something
big
like that.
man Satya, something like that, which it felt like a stretch to me that would be sustainable given the looming costs that OpenAI needs to incur. Obviously, they're ramping revenue really quickly.
Yeah.
But you have Broadcom to pay, you have Oracle to pay, you have all these.
But it is tied to revenue. You know, it's not the same as being like we're on the hook
crazy
for $5 billion.
Yeah,
it's not a fixed cost. Exactly.
But still, it's a lot of there's. These companies are under margin pressure already.
And wasn't the original deal that it would be 20% up until they paid $100 billion or something like that? There was something where like it eventually ran its course. I believe it had an ending, and I think that's what's justifying a lot of the underwriting, because the lesson from Google, the lesson from Facebook, the lesson from Microsoft and the rest of the hyperscalers was that you needed your DCF models to be 20 or 30 years into the future, right?
Yeah.
And so if you didn't take into account the third decade of growth, you were undervaluing.
It was originally reported 20% through 2030.
Okay.
Which still is.
I don't think a lot of investors are scared by thinking about value in 2035. I think they're fine with that now. I think they're saying like, I have a 10-year fund, and realistically, all the best venture investments, SpaceX is still hanging out in the portfolio 20 years later. They got continuation funds. I think that a lot of investors are actually fine to say, this company is going to be like, maybe a financial mess for 10 years. But if I'm super confident it's going to be a money printing machine in 20, I'll do the deal all day.
Yeah.
I think that's the rationale.
It's still insane to think that the deal ever got done in the first place.
The Microsoft deal?
Yeah, if you talked to a founder and they were like, I was running a fundraise and ended up taking this deal. I got the valuation I wanted, but ultimately it gave up 20% of revenue off the top too. So not 20% of like profits, but like a 20% tax on gross revenue.
Yeah.
Just till 2030.
That would be.
And the founder's like, well, it doesn't matter that much because I'm in this for like 20 years. You're
most companies do not get the pass on that.
Yeah, very few businesses in the world, especially like highly competitive, categories, can sustain a 20% tax off the top.
Yep.
And still really produce any profits or be functioning at all.
But
obviously,
I'll push you
profits
off. What if your business is mobile games in the App Store? You've effectively been paying Apple a 20%, 30% tax off the top.
There's a bunch of examples. Right? Like Nvidia could do this too, right? Yeah. And they sort of are through this kind of deal.
I don't know. I mean, I agree with you. Like it is a crazy deal, unprecedented in a million ways, but everything about the entire OpenAI story is unprecedented.
Yeah.
Unprecedented to start as a nonprofit, unprecedented to have, who are the co-founders? Elon Musk, Peter Thiel, like you have 7 different co-founders who have, a bunch of co-founders have gone off and start direct competitors. That doesn't happen very often. Usually people are like, I got bags in the category, I'm going to go work on something else.
Yeah.
There's a bunch of weird stuff. Anyway, speaking of the nature of the industry and all the competitors, Sergey has a bit of a joke post here saying, Dario, Claude will take your job, but it will feel ashamed. Elon, look at this anime girl. She says the N-word and is almost naked. Zuck, superintelligence will help people watch more Instagram reels. Demis, Gemini recently calculated more precisely the motion of the heavens. Sam, excited to announce that OpenAI Inc. has entered into a definitive agreement with OpenAI LP and OAI Corporation and has signed MOUs with OpenAI OpCo LLC and OpenAI Global LLC. It really sums up. And Sergey,
They're all cooking.
Yeah, they are all cooking, and they're all telling like slightly different stories. Sergey, these are all real corporate entities, by the way.
It's worth noting. It feels like Satya has definitely slow played the renegotiation of this deal. Like they've been trying to make this happen for a long time. It was reported a while back that Satya wasn't budging, but it's good to see that the company is able to.
So here's a
start
summary
moving
from
forward.
Rohan Paul on what's actually happening with this OpenAI and Microsoft deal. Microsoft and OpenAI struck a truce to extend their partnership, clearing a major obstacle to OpenAI's shift into a for-profit structure. The new agreement is non-binding right now, but it sets the final stage for final terms to be hammered out soon. In the proposed setup, Microsoft and the OpenAI nonprofit would each start with about 30% of the new company, with the rest going to employees and investors. The new company is the for-profit entity OpenAI is trying to create as part of its restructuring. OpenAI plans to keep nonprofit control and give that nonprofit an endowment stake valued at $100 billion. Wow, which would be huge on paper, but the timeline to turn it into usable grants is unclear. Although with the secondary markets, you imagine that has to be like, they're going to make payroll next quarter. Like they'd be able to sell some of that $100 billion and do a whole bunch of grants. California and Delaware attorneys are generally reviewing the plan, and OpenAI has told its investors it aims to finish the restructure by the end of the year or risk losing its $19 billion in funding. It's very funny that like for all this drama, all the books that will be written, the movies, like the end results, like, okay, there's like 3 parties around the table. How about we go equal? like Microsoft gets a third, nonprofit gets a third, employees, investors get the third. Like there's really like 3 key counterparties in the deal. And it seems like if this is what happens, they kind of just all walked away being like,
three key parties on the effectively on the cap table, but then you also have the California being like, hey, don't mess this conversion up. You know, you're a nonprofit, right?
Yeah.
California and Delaware attorneys general are reviewing the plan, and OpenAI has told its investors it aims to finish.
I'm talking about like the end result of like who gets what in the, like there's a bunch of poker chips on the table right now, and there's a there's parties around there that all need to agree before anything moves forward, right?
Yeah.
And it's just interesting that like what they wound up with was like, let's go equal. Like let's split it equally.
Yeah,
right?
if you play this out, though, what happens? What do you think the nonprofit looks like 10 years from now? OpenAI continues to execute very well, becomes a multi-trillion-dollar, tech giant.
Yep.
And you have a third of the company owned by this nonprofit.
Yep.
What do you think?
How would happen, buddy?
How would you allocate?
What happens when you get a ton of missionary AI genius scientists who don't want to optimize for profits? They're just experimenting, working on whatever ideas they want. There's no pressure because they don't have a user base. They don't have an app store. They're not competing with anyone. They just get to go do pure research. What do you think will happen?
So they're going to create
a banger consumer app will happen for sure.
Oh, another one.
Nonprofit is going to launch another company and it's going to convert to for-profit again.
Well, I don't know. I mean, you could
last time.
The question is like, okay, what is the real relationship between the nonprofit and OpenAI, like the private, for-profit arm?
Yeah.
Because there's a world where they're just like, okay, we're just going to keep a lot of research and R&D happening at the nonprofit layer.
Yeah.
And then like try to just be the ones that
commercialize
every time, even though you would have to argue if it's like this.
I don't know.
Yeah.
I think over time, like the two entities will actually separate and drift apart.
It's hard to drift apart when we're, they're sitting on
30% of the cap table.
Yeah.
I don't know. That's not that crazy. Like there are VC funds that own 30% of a company when it goes public, and
they'll drift.
Like the VC fund is like off doing other stuff, right? Investing in competitors sometimes, like just kind of looking for the next thing, getting out of the position slowly, right? Is selling into the public markets. So I don't know. Of course, I'm kind of joking, and it's like a little bit of a hot take to think that like there will be something, but truly, like if you want, okay, another interesting twist is like right now there is a war for talent in AI, and there's a war for specifically for missionary talent, right? The true believers, the folks who are just going to go grind and explore and not be beholden to, optimizing the like next quarter's MAUs, right? So if you're OpenAI and you don't want your direct competitors telling that story, hey, we're the missionary AI lab, creating a talent vacuum for that archetype of researcher with the nonprofit, saying, oh yeah, well, like we're a nonprofit, like you can do whatever you want. You can just do research, and we'll match the salary that Anthropic's paying you. Zuck made an offer. Yeah, we'll match it just for you to come and hang out here.
Can they give those researchers exposure to the private company shares too? Just being like, yeah, all of our directors at the nonprofit, like they get paid out a bonus based on, there's plenty of histories of nonprofits being abused, right?
Yeah,
like nonprofit
people get paid like high salaries. Usually it's not like stock in a different company.
Well, yeah, but it could just be like, every year the stock appreciates some amount and they sell off a position to be able to pay.
You would assume that they're selling down the position and paying cash.
It's such a strange position.
It's extremely strange.
And this is why when I talk to founders that are like, I think more and more people have kind of like standardized around just like start your company on Stripe Atlas.
Yep.
Don't try to
Delaware C Corp.
Delaware C Corp on Stripe Atlas.
Post Elon, like
make sure you have vesting.
Like that has not made its way down to startups.
Yeah,
most startups are just C Corp.
But I have a friend of mine that I grew up with that had a breakout consumer product. Mm-hmm. He botched the cap table, didn't set up vesting, and it ended up costing him like millions of dollars. Mm-hmm. He would effectively be retired in his 30s if he had done this correctly. And that's why it's so key to get the foundation, the legal structure of a company set up properly. Yep. And so the fact that you had Peter Thiel, Elon Musk, Sam Altman, they all set up this entity, and in the fullness of time, it's like they botched it, right? Like it was maybe a good idea at the time to try to create a nonprofit for AI research, but just got kind of messier and messier and messier and messier and messier. And every single person involved is probably thinking, I wish we just set it up as a C Corp from the beginning.
Yeah, completely agree. Good take. This idea of like, the folks who are on the founding team are not dumb. They're like the smartest people in Silicon Valley, basically. So maybe they were like overthinking it or like too smart and being like, let's create an even more complex structure. The flip side of like the steelman on like what happened is if you play it back and you go back to like 2015, you say like, okay,
they raised a lot of money, and at the time AI was maybe too like there wasn't an immediate commercial opportunity, and so it's very possible they wouldn't have been able to raise like
even if they raised
that they got.
I think they might have been able to raise the money, but then my question is like, what happens in like 2017? When your share price is kind of stagnating, you still haven't made revenue, and the meme in Silicon Valley is like, oh yeah, like Sam raised a mega round, a pre-product market fit, like that company's not really doing anything. When are they going to ship? Right? Instead, it was just like, oh yeah, like they have a research organization and they're like continuing to do cool like little projects here and there, and like, oh they got a robotic arm to solve a Rubik's Cube, or like, oh they won at chess or Dota or like whatever they did. And so I bet the vibes were better throughout that. It's really hard with a C Corp to keep, because everyone's looking at the for a decade when you're flat. And then it's like, I mean, we've seen this with so many other companies that have raised hundreds of millions of dollars pre-product launch, and it's really hard to get out finally. So I don't know. The counterfactual is fascinating. I wonder if it would have, how it would have played out. It's tricky.
Yeah.
Anyway.
Yeah, it's just interesting that almost every person around the table probably feels like they would have benefited from a more simple, traditional structure.
I think you're right. Yeah.
Yeah.
And I think Sam's even said that. Been
Yeah.
like, yeah, we kind of overthought this one and like
Yeah.
it would have been better just to come in clean. But you know, it worked out anyway, more or less. And like we got the
Yeah,
product.
honestly,
We got AI.
OpenAI is the best example of like if you have true product market fit, you can botch so many things
True.
and still
Great-
be
great
wildly
take.
successful.
A great take. Anyway, automate compliance, manage risk, and prove trust continuously with Vanta. Vanta.com. Vanta's trust management platform takes the manual work out of your security and compliance process and replaces it with continuous automation, whether you're pursuing your first
Used
framework
by
or managing a complex program.
Duolingo, Snowflake,
Cool.
Intercom, GitHub, Ramp, all of our favorites.
So I think we covered most of this. We can go through a little bit of the Wall Street Journal's coverage. The Primeagen, I hope I'm pronouncing that correctly, is putting Dario from Anthropic's claims about AI progress in the truth zone. Said we are 28 months into 6 months from AI taking your jobs, 4 months into 24 months until cursor is obsolete, and 6 months into 6 months until AI writes 90% of your code. Part 2, the codening. So exactly 6 months ago, this is the report from Futurism. The CEO of Anthropic said that in 6 months, AI would be writing 90% of code. And so I think people, when Dario said this, people interpreted it as, okay, well, 90% of the software engineering jobs are going away. And that certainly hasn't happened. I mean, we're not seeing like fantastic job numbers broadly in the economy. There are like rumblings about software engineers not getting hired as fast as they should.
New grads struggling.
But I mean, we're talking about like what, a few percentage points, if anything. No, certainly not 90% of software engineers are out of a job.
Yeah.
But simultaneously, we're seeing folks like Brian Armstrong at Coinbase highlight that, what is it, 40% of their code is written by AI now. There's a lot more code being written.
There are great companies that are internally not focused on hiring new people.
Yes,
and yet they're still ramping revenue, right?
Yeah,
we talked about this with Carp, right?
Code.
Headcount.
Yep.
With Palantir, headcount is like relatively flat.
Yep.
But revenue's way up.
Couple thousand people.
Klarna, right?
Yep.
Headcount is way down.
Yep.
Revenue's way up.
Couple thousand people.
And so you have these companies that are doing well, growing really fast, and then not needing to add a lot of people. You know, you could just make an argument that that's like willpower, right? Or the other side of it is like, you know, they're getting new efficiency. There's it's an interesting, it's hard to tell what's driven by increased efficiency due to AI versus just CEOs deciding like, we're all going to do more.
Yeah.
And I'm not giving you,
Yeah.
we're not giving you budget to like, for this new product you want to launch, have 2 people launch it.
Yeah.
We're not going to give you, 20 people and some massive.
Yeah, it is.
budget.
It is like if you had told me like artificial AGI is real, we'll pass the Turing test, AI will be able to write code at the level of a mid-tier software engineer, maybe not total top-tier software engineer, but like
You're going to one-shot a calendar app.
And billions. Yeah, you'll one-shot up a calendar app and billions of dollars will be spent on this like every month. I would have said like, okay, well, like I would expect that like the app from United Airlines is less buggy. And like I haven't experienced that. I haven't been like walking around the internet using different websites and tooling and being like, oh wow, they did a complete rewrite on this. It's so much faster. Or like, oh wow, there's no bugs in this thing or that thing. It's like it's still very incremental. Like we really do have a lot more software to write because I do believe that the code's being written and like the product, like internally, every company is writing more code and doing more things, but the amount of work you have to do to actually improve your experience is crazy.
There's a lot of CEOs and CTOs and engineers that have come out and said 90% of my code is written by AI, but they're still like, it's not like they suddenly only need to work for an hour a day.
Yeah.
Right? It's not like it's just like,
the whole
okay, we just need to do
as hard, if not more.
Yeah, we just need to do more.
Yep, totally. Well, if you're writing a lot of code with AI, you need code review for the age of AI.
That's
Go
right.
to graphite.dev. Graphite helps teams on GitHub ship higher quality software faster.
Teams like Ramp, Figma, Asana, Cursor, Shopify.
Speaking of Ramp,
like more.
We have a post from Ara Karazian, came on the show earlier this week. He has the data on GPT-5. He says GPT-5 was good actually after a launch that let that led Sam Altman to apologize. The latest ramp data shows OpenAI is growing business adoption faster than any other model company tracked by Ramp AI Index. It's also not just tech manufacturing is adopting AI faster than any other sector. And it's why the consensus figures on AI adoption are probably wrong, or the census figures, which we talked about with Ara. And he says, read his full analysis on Substack. You can go to econlab.substack.com to subscribe to Ara Karazian. And you should, of course, go to tbpn.substack.com and subscribe to our newsletter. So, the Ramp AI Index, the model adoption rate, the share of US businesses with paid subscriptions to AI models jumped significantly in, what is it? This is probably March was OpenAI's really crazy fast takeoff. And then in July, the data's up again. This doesn't read purely as this reads more as like people understanding O3 and reasoning models, and starting to pay. Also, just more monetization tiers, probably more ways to pay, maybe. But 44% of U.S. businesses now have paid subscriptions to AI models, platforms, or tools across OpenAI, Anthropic, and xAI, Google, and DeepSeek. And the Google number seems low, since I would imagine that some of those Gemini subscriptions maybe get rolled into Google Apps, like, because Gemini just shows up in the Google Apps billing already. We'd have to talk to Ara and dig in more, but I mean, it's sure like the clearest piece of the data is that OpenAI is on an absolute tear here in the B2B context, which is interesting.
Yeah.
And it's not like we're not seeing like, oh, GPT-5 sucked, so it's falling off a cliff. It's like, no, like the models are getting better. It's just like we talked about this with the iPhone. Like if it was worse, they probably wouldn't release it. They just stick with the best. But anyway,
this is crazy.
This is another pro ChatGPT's impact and OpenAI's like I guess like I could put this loosely in the bull case, but read it.
So Isaac says, I met someone this morning whose number one source of traffic is ChatGPT supplement brand, and has figured out how to get ChatGPT to recommend the brand whenever someone asks about a specific problem. Crazy. That is crazy. I feel like I'm surprised we haven't seen more of this, but it's just taken a while for not only ChatGPT to get adopted to the point where it's statistically significant, but then also people to figure out how to make it happen.
I mean, you lived the podcast boom firsthand. And how long was it? Like podcasts had existed for years before we saw like AG1 become like the podcast supplement brand, right?
Yeah.
And there were a few other brands where it was like their whole growth strategy was uniquely modern.
Do you remember them?
Four Sigmatic, for sure. Yeah. That's a great example.
My friends had a podcast, and I was in college at the time. They were quite a bit older.
Mm-hmm.
And when I met them, they had one sponsor, which was like some random coffee company that just like the founder happened to be in the audience and just reached out and was like, hey, let me so they started the podcast without any real plans to monetize or anything like that. And I at the time it still felt like I was late to podcasting because there was a bunch of podcasts that
I mean, you could say the same thing about direct to consumer advertising on like meta platforms. Like the Four Sigmatic, I heard, do we hear the numbers together? Someone was talking and saying that the
TSC era was so crazy because it was like a number of brands realized like, hey, you can buy like really cheap, really effective advertising
on Instagram
and meta platforms broadly. And
that allows you to scale super quickly.
It was literally like if you had a decent product and you had funding, you could like scale overnight.
This is
and
the mattress
so
boom,
many people realized so many people realized the opportunity and just flooded it, and it just hit an auction. So the supply grew, but demand, for the ad inventory.
I think in the mushroom coffee category, there are 3 or 4 different brands doing $100 million plus in sales. maybe like
Yeah.
$300 million plus in sales. Like there are some really, really big.
Yeah, there's Mudwater.
Mudwater, Four there's two others that I hadn't even heard of. And you just, every time you hear
I
one of
heard
these
a
brands, like,
crazy.
yeah, they went from 0 to $200 million in 5 years. And you're like, what?
I heard a crazy story about somebody interning at one of the mushroom coffee companies, leaving, starting anyone getting and out and generate. This company was already at a 9-figure revenue mark. The intern left and started another one, and then outgrew the original one.
That's insane. Yeah. Yeah, a lot of
Completely
the financial. I do wonder what those companies look like in 5-10 years. I mean, we've seen when we talk to the Ridge guys, like top line growth is not the end all be all of D2C success. Like you have to generate
cash flow matters.
Cash flow matters, and this takes time. And so when you hear one of those like crazy revenue ramps, especially in D2C, you should always ask this, even in AI, but in D2C, you really need to understand, okay, is this just the founder's good at fundraising and they're losing money on every transaction and they're just going to keep this flywheel going because they've figured out how to make their revenue steeper than everyone else, and so they keep getting funded? Or is there something really special about the economic and the
I always used to laugh. Something about unprofitable SaaS. I mean, it's like, how are you going to sell software and lose money? It's funny, but like selling physical goods, it's like, wait, you sold this mattress? It cost you money to sell this sell this mattress?
Yeah.
And obviously, there's plenty of cases of great companies that were deeply, unprofitable for a long time. But something about D2C companies, running in the red massively.
Yeah.
It's like, come on, you should, at least
I mean, it's like lemonade stand stuff. It's like as a kid you learn, like, buy the lemons, buy the sugar, get the pitcher, and then add it all up, multiply it by 2. That's how much you're charging. It's like cost-based pricing is like, the most instinctual economic force in the world that like a child can understand. And yet we justify all these different things, and sometimes it makes sense. Sometimes it does make sense to lose money on SaaS for a little bit if you're building some sort of network, some sort of locked in thing, some sort of high margin opportunity down the road. Anyway, if you're growing your business, you need to analyze some data. Get on Julius. What analysis do you want to run? Chat with your data and get expert level insights in seconds. They're loved by 2 million users and trusted individuals at Princeton, BCG, and Zapier.
Equally important, we need to talk about Profound in the context of ChatGPT traffic.
Yeah, I was about to say,
I would not be surprised if the company that Isaac is talking about here, that's getting all of their traffic from ChatGPT, is using Profound.
Yeah.
So
try profound.com. It's in the back.
There you go. I put it up on the.
Reach millions of consumers who are using AI to discover your products and brands. Get your brand mentioned in ChatGPT.
Yeah, whether it's a consumer product that you're selling or enterprise software. You need to get on.
We kind of took the conversation in like an almost like negative situation, talking about like the long-term durability of these businesses. But I mean, really,
this is crazy because it's organic.
Yeah, exactly.
It's like SEO is sort of like faded in terms of importance and relevancy.
Like if you can be the first brand to go and find the correct strategy on Instagram and dominate, like that's such a huge advantage. And it's the same thing with like, how did Airbnb get to scale quickly? Old school SEO. Right? They just had landing pages for every single, rental homes in Tulsa. Right? Yeah. And when you Google it, they're really good at SEO. There's a whole bunch of other, Drew Houston at Dropbox. He was like, we copy pasted the entire like Web 2.0 growth handbook, which was like, give 10, get 10 PayPal model of like, incentive-based viral growth. And with Dropbox, it'd be like, I give you 5 gigs of storage. I get 5 gigs of storage. We add it all up and it just went super viral. And he said something like all of the viral, like the viral growth, it's like you can go way deeper with that metaphor, which is basically like, as an internet SaaS company, you need to be sneezing on as many people as possible, which I think is hilarious. So he's like, to get the viral coefficient up, you need to be sneezing a lot and not washing your hands. What does that mean in the Dropbox context? Well, it means whenever someone clicks a Dropbox link. There's a little prompt. Hey, do you want to sign up? Hey, put your email. Let's just grab your email before you view this PDF.
Yeah.
Oh, HelloSign. Yeah, we acquired them. Let's bring them in. And oh, if you want to sign a document, like set up a Dropbox account, right? It's like these are sneezing all over the internet, is what he like referred to it as. I thought it was brilliant.
Yeah. Yeah, AngelList has done this well with their roll-up vehicle product, right?
Yeah.
Every time somebody gets invited to a roll-up
Right.
vehicle, they create an AngelList account. They maybe make their first investment,
Yep.
and AngelList can say like, "Hey, do you want to invest in this fund? Do you want to do this? Do you want to do that?"
Yep.
So, do we want to read through this journal article at all? Do you think we covered it?
I think we covered most of this. Basically, the journal's asking about OpenAI's funding challenges. We ran through this yesterday, and basically my conclusion was $300 billion to Oracle is a staggering amount of money, but it is in line with what it takes to build all the data center capacity for an Amazon.com, a Facebook and Instagram, like Meta platforms, internal, a Google.com, not the cloud businesses. And so I can imagine the spreadsheet that they used to develop the model. The question is, will the growth continue? I think they're on a fantastic growth curve. It feels like this will that they will wind up paying a lot of this, and that's certainly what the market's pricing in based on the pop in the Oracle stock. It's not like Wall Street looked at the Oracle backlog and was like, "Oh, that's fake. This is bearish. We need to sell the stock." No, they were like, "Yeah, that money's coming in. 300 billion's coming in over the next half decade or something. So like, let's send it." I think that was the market reaction.
I think you can think that it may not materialize, but still think it's a good investment in the short term.
Sure, but I mean, they missed
like
on top
purely
line,
but purely momentum.
Maybe that's I think that's kind of odd. It's kind of like a circular logic, because I mean then you get into like you could say that about like anything like yeah, well, like they
I would say like a bunch of people are like,
yeah.
wow,
yeah,
Oracle is going to generate hundreds of billions of revenue from AI. I want to own this stock. And then I'm just saying there's a category of people that are going to say like, okay, this stock's going to run at least in the short term, but maybe it's 1999 and we're going to see some type of, correction here. So
we will find out. We'll see. I mean, we'll probably have more data on. I mean, as soon as Oracle's next quarter prints, we'll see exactly how much they're pulling down, exactly how much they're building. OpenAI in the last 9 months has committed to spend around $60 billion a year for computing from Oracle, and this will really, I mean, if this pencils out, like this will drive a radical transformation in Oracle's business. Like we saw the chart in the journal where their core business, like everything that they've built up so far, is basically expected to decline over the next 5 years as they switch to pure cloud computing. Like they want to be a hyperscaler.
Eric Newcomer this morning said, seeing a 48-year-old database company suddenly grow by more than the size of Salesforce over the course of a trading day is one of those occurrences that makes you wonder about the moment we're in. It's at once incredible, uncanny, and terrifying. Like your grandfather during a family reunion, gathering everyone around, tossing off his walker and doing parkour. Good, very, very funny bit. Eric Newcomer also was bearish on OpenAI at around 30, or at least like very skeptical.
Yeah, maybe a year or two ago, he wrote kind of the bear case.
But I think this is a very, very fair.
OpenAI loses billions of dollars a year and has told investors it is on pace to make $13 billion in revenue this year, according to a person familiar with the matter. Less than 3 years since the launch of ChatGPT, OpenAI is tying its fate to a belief that companies and consumers will increase their spending on artificial intelligence at explosive rates for years to come. And I do wonder, like you have to believe in the agentic commerce story to really see another like 10x in revenue. How do they get to I mean, the projection that people are underrating OpenAI, I believe, is 200 billion in revenue in like 2030, and it's hard to imagine. Like, am I going to pay $2,000?
It's hard to exist.
Is everyone going to pay
my soundboard?
Would I pay? Yeah. Yes.
I want to hit the air horn so bad.
Yeah.
Yeah, I think
You got to
I
monetize the
don't.
free users.
Yeah,
You got to
you
monetize
just
the free
gotta.
users. You can't get them
Yeah,
all on $20 and $200 a month plans. Maybe the
the
$2,000
example
a
that
month
I
plan.
always
I don't
give is
know.
like the average American, if they don't have a show they like on your streaming platform, they will just cancel it, right?
Yeah. Yeah. Like, I mean,
Like they're like,
so
sorry, I
there's
don't
a lot of
care.
people that just haven't upgraded, I mean, people are just starting to experience like the reasoning models. Um, I don't know. They're like, if the paid plans stick around, like it could be, they could get a lot more people to convert. Especially if it goes through your business, if you're expensing it, if like how much money is spent on like email subscriptions across
Yeah, it'll be interesting.
Microsoft and
An interesting
Gmail.
comp
It's
is
got
like,
these
do you think that Netflix or OpenAI will have more subscription revenue in 2030?
I would say OpenAI by a mile.
Yeah, and you think that's because people will pay to have this like all-powerful assistant that can.
Yeah. I mean, I guess the only question is just like, is there a better way to monetize? Like, can you get $20 or $200 of value out of someone by just handling their purchases and just doing the agentic commerce thing? And
Yeah,
so you're not
and
even like,
OpenAI
oh,
is not OpenAI is completely aware that they're driving a ton of economic
we
activity,
just
right?
saw
The
it. There's a
supplement company,
brand
they're
that's
like, I'm so
building it
happy
into.
that you're making millions of dollars from our product.
Yeah, yeah, exactly.
How
Like,
exactly did you?
yeah, like I'd like you want to keep this relationship going. Let's get a
Yeah.
cut, and that's super valuable. That's how Meta generates so much money, and Google too. The scale of like internet commerce and taking a cut of all of internet commerce is extremely. Uh, it's just an extremely huge pool of capital to draw from. It's a massive Thanksgiving plate to eat off of, right? Um, and so OpenAI deals that came to light in the past week have added more than $400 billion to the market value of two companies, chip designer Broadcom and cloud provider Oracle. They also put Oracle chairman Larry Ellison in striking distance of becoming the world's richest person. Oracle's stock market value jumped over $240 billion on Wednesday after the company revealed a giant backlog of computing orders. Most of that is derived from a roughly $300 billion 5-year computing deal with OpenAI. Well, if you are generating media, you got to go to fall.ai, generative media platform for developers, the world's best generative image, video, and audio models all in one place. Develop and fine-tune models with serverless GPUs and on-demand clusters. Don't get caught writing a $300 billion check to Larry Ellison. Just go to fall.ai.
Not today. Adobe, Shopify, Canva, Quora,
Yeah.
and many more are on Ball, and you should be there too.
Anyway.
Did we want to tap through this? Didi was highlighting
Yeah, this was an
Apple's.
interesting story.
It's so crazy to look back at these like incredibly strategic acquisitions
Yep.
from
A decade ago.
two decades. 2008. So
Wow.
in 2008, Apple acquired Palo Alto Semi. Fantastic name.
Great
Really ahead of the curve. If anything, they created the trend.
Semiconductor company at
of
Palo Alto. Really? Yeah.
The silicon company of Palo Alto.
What's funny is there's also Palo Alto Networks, and so I wonder if Palo Alto Semi was directly inspired. They're like, oh well, like we're in Palo Alto, and we're doing something similar. Anyway, you want
I
to
actually like this formatting of just Palo Alto Semi, Palo Alto Network
Yeah.
more than the blank of blank.
So you'd just be New York Browsers. The
The
New York Browsers. It sounds like a sports team. The Palo Alto Semiconductors. The Palo Alto Networks. Yeah, the Palo Alto Network sounds like a sports team too.
We should just rename our C Corp to Hollywood Content Inc.
Yeah.
But anyways,
anyway, what'd they pay?
Didi says few people know about Apple's acquisition of Palo Alto Semi in 2008, arguably the highest ROI acquisition in tech history. The $270 million price for 150 engineers laid the foundation for all the Apple silicon chips you see today that have generated over $500 billion in value to Apple. And anyways, he's highlighting an article from 2008. An Apple spokesman said Apple has agreed to buy boutique microprocessor design company called PA Semi. The company, which is known for its design of sophisticated low-power chips, could spell a new feature for Apple's flagship iPhone and possibly iPod products as well.
That is crazy.
These kind of acquisitions have created the set of circumstances that allow CEOs to justify these like absolutely insane. Because when you get an acquisition right,
totally.
the return can be as good as a seed to unicorn venture investment.
Yep.
And so, but when you think about like the Instagram acquisition, the YouTube acquisition, Palo Alto Semi, right? These were
a bit different. I just feel like there is an alternative scenario where they don't buy PA Semi. Instead, they're just like poaching and hiring 150 people, and it takes them like 3 years to get there, but they eventually wind up doing it. But maybe there's like important IP. I don't know. I wonder, what do you think $278 million is in today's startup economy? Like, if you go back to 2008, $278 million feels like a blockbuster acquisition to me. This is
totally. That's what I'm saying. Yeah.
Oh, but is that a $10 billion acquisition? A $2 billion acquisition? Like,
yeah, it's funny that like M&A has like actually outstripped like inflation.
100%. I mean, you look at Scale AI, right? It's a almost $20 billion deal.
For half the company.
Yeah, and so I wonder, like, have we really had 100x increase in valuations, basically? This makes me want to go dig into Apple's recent acquisitions, because remember on the earnings call, Tim Cook said, "Hey, yeah, we're actually acquiring a company like every few weeks. Like, we've done basically one a month this entire year."
Yeah,
and everyone's been like, "Oh, it's boring. Like, who cares?" Like these, they're not buying Anthropic, or they're not buying Perplexity for 10 billion. But if they have a net PA Semi in the portfolio right now, and we just haven't clocked it, like, that's going to be amazing. Yeah.
So biggest M&A, I'm on Gemini. Biggest M&A
of 2008.
2008 was HP acquires Electronic Data Systems.
Okay.
Which was the biggest $13 billion deal.
Like a huge merger of massive companies.
Oracle acquires BEA Systems, which was a business software company I'm not familiar with, but I love business software.
Me too.
$6.7 billion. Google acquired DoubleClick for $3.1 billion.
That was the huge acquisition.
Yeah.
That's amazing.
Which in hindsight, like,
it became the background of
incredible acquisition.
Edwards.
Yeah. And Business Objects was acquired by SAP.
I like Business Objects. That's a good name.
We don't make.
Yeah.
It's like we don't know how to name companies
Business
like this anymore.
Objects. That's so good.
So
the business company.
There was a ton of like multi-billion-dollar M&A that year.
Okay.
But it does feel like if Apple were to make a super strategic acquisition today, I mean, they were. Who knows how real like the Perplexity rumors were, right? They were, Apple was under pressure to make an AI acquisition, but it didn't feel like Apple would ever get to the point where they would buy Perplexity for 18 billion or whatever they wanted out of it.
It's just odd for
it was like when you look at
an application layer company, they really don't buy a lot of applications. I mean, they bought Shazam, I believe, but a lot of times what they're buying are these underlying hardcore teams that are going to create the foundation of the next hardware wave for them. Like in the lead up to the Vision Pro, they acquired, I mean, someone who sold a company to them that went into their VR portfolio, correct? That is the Apple playbook. Is we have a vision, we're going to do VR or augmented reality in a decade, or we're going to do car, or we're going to do custom silicon. And so let's start acquiring little investments here and there, here and there, and here and there. They're not just going to go out and be like, we're trying to buy Waymo, or like, we're trying to buy the best asset. They're kind of the opposite.
They
like
bought
the Fifth
Beats when they bought Beats for $3.3 billion. Beats was doing like 1.4 billion of revenue.
Sure.
In the trailing 12 months.
Yeah, exactly.
Again, it was a very,
so running
fairly
through the
reasonable
PA Semi acquisition, Didi has the story. PA Semi specialized in power efficient chips with Power PC chips that delivered 300% more performance per watt than Intel Xeon at the time, which I believe was their server chip. Founded by the late Dan Doberpluh. DEC Alpha and Strong Arm Legend. In 2003, the team had expertise in low power architecture that Intel couldn't match. The acquisition gave Apple the dream team that would create the A4 chip in 2010, launching Apple Silicon dominance. Key engineers like Jim Keller, G. Williams III, and Johnny Srouji architected the A series that powers 2+ billion devices today, crushing Qualcomm's monopoly. This philosophy evolved into the M1's 20+ hour battery life that's powering this laptop right here. Although it's
You
an
getting
or.
20 hours out of that bad boy?
I'm plugged in right now. I'm not risking it while we're on the stream, but I think we could maybe get 20 hours if I was, low dim screen brightness and maybe not connected to the Wi-Fi and maybe just in a text editor with dark background the whole time. And it also had a 3.5x faster performance than Intel at 1/3 the power. The M line of chips today powers Macs, iPads, and Vision Pro. Without PA Semi, there may never have been an iPhone processor independence, iPad dominance, no Apple Silicon Macs. The small investment, a Series a Series B round today, has generated 500+ billion in value. Strategic acquisitions like this can make or break the future of a business. And if what else? Turbo Puffer. It's on the Schizo.
We
charts.
puffing.
We're puffing. Search every byte, serverless vector, and full text search built from first principles on object storage, fast, 10x cheaper, and extremely scalable.
Pretty much
You can
used
get
by
started.
every
Cursor.
leading
No,
AI company we've been
video.
able to find. There's a bunch of logos that they have that are absolutely crazy that they're not even listing on the website.
Yeah.
So a lot more to come from Turbo Puffer in the near future. But for now, get on it.
Did you want to go through this post by Ajni Midhad and Jason?
Yeah, I thought this was
Break it down.
a couple things you could read into this. So he says many VC firms are being asked by their LPs how they so utterly missed the entire 20 to 25 cohort of frontier AI startups that are now category winners. Worse, they're being asked the same by next gen founders. I've never seen so many traditional investors become obsolete so fast.
So,
It was like, if you think back like the 2020 through 2025, you had ZERP, where just every category was going crazy.
mhm,
And then you had like fintech was super hot, crypto was super hot. It was easy to get kind of like
Distracted.
if you were a generalist VC, a lot of generalists like decided I'm gonna go just be a crypto investor.
Yep.
Or I'm gonna focus really heavily on fintech. And then you also had the sort of American dynamism boom, which people
Yep.
were drawn to in different ways. But when you look back at when some of these leading AI companies were started,
Yep.
it really was like 2022 during like a time where a lot of VCs were like trying to, do like basically damage control on their portfolios, right? They had funded a bunch of companies like at insane multiples. We started seeing, a real kind of like correction in venture and if you just like didn't have your eye on the ball
Yep.
and weren't like seeing kind of the future, you missed a lot of.
Yeah. And when I think about the cohort of frontier AI startups, who do you put in that bucket, in that cohort, 2020 to 2025? Like if you're a traditional investor that doesn't want to become obsolete, what logos do you want on your portfolio page
Well, so
that signal to the next generation of founders and LPs that you did not utterly miss the entire 2020 to 2025 cohort of frontier AI startups? Put in that bucket.
First example that came to mind was like Listen Labs, right?
Okay.
$6 billion company
Yeah.
now. Started in 2022.
Sure.
Seems like it, seems very obvious in
Mhm.
hindsight, but if in 2022 you had like funded, 15 fintech companies and were trying to figure out what was going to happen to them as interest rates were spiking,
Mhm.
and you were distracted by crypto, you just like didn't, you weren't. There were people that were locked in on AI, right? The people
Totally.
that come to mind is like people like Alad Gill who are in a lot of these companies,
Totally.
right? A lot of the platform funds, like I mean, obviously, Anjane at Andreessen is they're in a lot of these companies, but
Yep.
they're multi-stage, right? So it didn't matter. You didn't have to catch them at Series A
Yep.
or seed, although they caught plenty. And then the other thing is like if you're a platform VC and you weren't in any of the winning foundation models,
Yeah.
like what were you
So
doing?
Khosla has a fantastic story around early OpenAI. Thrive has a fantastic story around early OpenAI. Then there was that first like right around the moment ChatGPT happened. I remember there was a big round and a lot of investors got in there, and it was around uh, it was in the tens of billions. And it was a crazy valuation to kind of come out of the gate with. There was already this Microsoft deal. It was a complex thing. You had to take a ton of risk on the nonprofit for-profit conversion. But
Yeah,
the folks
to
who
be
did,
clear, there was plenty of reasons not to do
100%,
OpenAI,
100%.
not like whether it was
And Prospect,
pricing,
same
the
thing.
structure, there was
There was a
plenty
whole
of it.
meme about the foundation model layer will commoditize, right?
Yeah.
And so if you fell for that meme, you are not in
And then there was also
OpenAI
the
or
meme of
Anthropic.
like the application layer. There's no value. There was a period where people
You fell for both
you
memes. And
fell
you're
for
like, I just have a
just like
bunch.
the mid-curved both of them, and then you're sitting here. You got no foundation model bets, no application layer bets, and you're like, well, even the new foundation models are too expensive. I can't do
Yeah.
those. And then this company is just like trying to fast follow that company that
Yep,
already
yep,
broke out.
yep.
Um,
So, I mean, when I think about the 2020 to 2025 cohort of frontier AI startups, yeah, I think 11 Labs fits in there. I think Midjourney, no one got into. I think I would put DeepMind. You couldn't invest because that was with Google, but it's got to be OpenAI, Anthropic, or a few of the other major like application layer companies that have done very
yeah.
well. And if you're in those, even if it was a growth round and you got in later, if you at least built a position and have something going on there, it seems like you kind of check this box. But it is an interesting question
Yeah.
to phrase. You gotta buy Fifth Ave sometimes.
That's
Anyway,
right.
Linear is a purpose-built tool for planning and building products, meet the system for modern software development, streamline issues, projects, and product roadmaps.
I think
Linear.app.
all the breakout AI
Yeah.
companies are already running on Linear, and you should too.
Well, we have some news from Dylan Patel over at Semi-Analysis. Another giant leap, NVIDIA Rubin CPX specialized accelerator and rack inference prefill specialized GPU. Dylan says, NVIDIA has widened the gap for inference rack scale architecture yet again. Prefill specialized inference chips massively lower total cost to own per million input tokens on long context transformers. As usual, other AI chip upstarts will follow this with prefill specialized chips, but later. And so yet another bullish take for NVIDIA. Everyone's competing. Following the AMD story has been interesting. Dylan's been pushing AMD to fix some of the bugs, get more serious about AI, really talk to the developer community, engage with the developer community. AMD was doing that, was seeing some positive early signs of being taken more seriously. George Hotz was on the team a little bit, but has since like pulled back. And Jensen sees Semi-Analysis too and can see, oh, AMD is coming for my lunch. I'm going to step on the gas, and it seems like he has. So congrats to everyone over at NVIDIA for putting on an absolute clinic. In rack scale
Jack
inference.
Fields says, well, he's quoting Sam,
Yeah, break
says,
down.
there's not a
Thankful.
single person in the world who needs a 2 terabyte iPhone 17 Pro Max. Jack Fields says, slaps car roof. This baby can fit so much other in it.
So is that a thing? Like
Yeah,
I
if you
go
look
to
at like
storage,
there's
where
like a
do I
category
get
called
storage?
other.
And is it big? Is that just all the spyware?
It usually is
It's a bad sign if I have other going on. I have a 1 terabyte iPhone, and I don't have any other. I have no other. My phone is applications, and then a little bit of
other.
photos,
I think
messages, podcasts,
I'm
TV,
looking now.
iOS,
I don't
and some
have
system data.
I don't
have
have it
any other.
anymore, but it used to be
Oh, little throwback
it used to
reference
be
to the other.
it used to be a much bigger
Well, they've done a
category.
lot better exposing where the data is actually stored. I think the 2 terabyte phone that feels like it's for someone who just
Mr. Beast
can, yeah,
filming,
was getting started.
his entire,
Yeah. And specifically the new phones, 48 megapixel cameras, gen lock, so you can run them for a long time, better heat management, so you can probably record for 10 hours if it's plugged in, no problem. And then you're saving all of that footage, and you can record in raw video now, raw, so that those are huge files. So there is a world where if you're using this as a production tool, I saw another take that was like the iPhone 17 Pro gets you ready for the $2,000 iPhone. Like mentally, that's a threshold, that's a Rubicon that everyone has to cross, and maxing it out and offering that level of performance and saying, hey, look, we put Pro on it. Like you have to be using this in a professional context. Like
Yeah.
you should be expensing this. And for someone like Mr. Beast who says, yeah, I want
So
to
funny.
a nice camera,
Every
Pro.
camera company just
Yeah.
being like, where Apple's not a threat. Like they're really
We might be
enthusiasts.
placing that with an iPhone soon. I think
Watch
it
out,
might
Sony.
be. Watch out, Sony, for
Tim
sure.
Cook wants your lunch.
He's cooking. He's cooking. Naveen
Uh,
Rao is leaving Databricks, a little bit of a trade deal, $100 billion startup to build a next generation computer to shrink AI compute costs. And Databricks plans to invest. That's bullish. Databricks sits around $100 billion and just raised 1B. They're also at a $4 billion run rate. Congrats to Databricks. We had our gong. A core problem for the AI industry is that large models are limited by memory bandwidth, interconnect latency, and power. So every token can be too expensive. A purpose-built computer may tackle those costs by bringing memory closer to compute, wiring chips with faster links. Is this data center focused or something that would actually sit on your on your desktop? Is this a George Hotz tiny box competitor? I'm not exactly sure, but congrats to Naveen Rao on the new gig. We will be following the story and monitoring the situation.
Big move. We'll try to get him on.
When you sell those computers, make sure you're on numeralhq.com, Naveen. Sales tax on autopilot. Spend less than 5 minutes per month on sales tax compliance.
Otto von Tweetmark
Tweetmark, Auto
says, can you short an entire country?
referring to Albania.
Albania is appointing an AI-generated government minister to govern the country's finances. Apparently, they've had so many issues with like corruption and fraud that they're just like, let's just like make an AI.
Yeah. No one's gonna
The
prompt
top
inject.
The top comment is their alternative is an Albanian. I've never really I don't think I know many Albanians, and I don't
Aaron
know the whole.
Atlas has some wild stories about going to Albania, I believe. I don't want to dox too much, but he has some funny stories. Hopefully we can get him to share them on the show. The idea of like, let's just use an AI to like clean this up. It's like, that's who's prompting it? Like, are they reliable?
Well, what if they're, Mir Muradi's Albanian?
Yeah.
Albanian American, so they could get thinking machines.
It would be a pretty crazy story of what's it called? Sovereign AI. It'd be a sovereign AI story.
I don't know. I don't know if they're claiming that it's their national champion yet. She's
not yet.
Albanian American.
Yeah.
But,
well, if someone in Albania needs to chat with someone about their tax return, maybe they could get on fin.ai, the number one AI agent for customer service, number one in performance benchmarks, number one in competitive bake-offs, number one ranking on
John,
YouTube.
I've been informed that back home in the studio, the whole team is clapping along with us during the
Hopefully we get the audio mix in and everyone goes for it. Gary Tan had a post. AI startup founders tout a winning formula: no booze, no sleep, no fun. But Gary Tan disagrees about the no fun though, and this is from the Wall Street Journal. San Francisco.
This is the vibe right now.
Startup founding, and we talked to a few of these folks. One of these guys came on the show just at YC Demo Day, actually. So fascinating. And this was a second. This was clearly like a story that was inspired by that previous story of that founder who said that the vibe's 996, no run hard, lift heavy, marry early. That whole viral quote. This is probably like downstream coverage of that, but in San Francisco, startup founder Marty Kausas was at the office on Sunday. Where else would he be? Kausas, 28 years old, recently posted on LinkedIn that he put in 3 92-hour weeks in a row. He went on vacation once, he said, but flew home early because he was too stressed about work. His goal is to build a $10 billion company in 10 years. The motive isn't purely financial. There are easier ways to make money. It isn't part of a social mission either. We built customer support software. It's not like this grand vision that we're saving the world somehow. He compared his pursuit to a board game, one he wants to win. I could be a programmer working at a big tech company, he said, but that doesn't sound cool. Instead, he raised $51 million for Pylon, an AI startup he co-founded. Congrats, Sizegong, for that. Yeah, I was just reflecting on this whole vibe and the coverage of this vibe and thinking about when I got to Silicon Valley and
Yeah.
what was similar and what was different. And so
You didn't have a PR person working overtime coverage. That was your mistake, John. I know you only raised like 17 grand in your first round.
raised $17,000 and there was no concept of going to the office because the office was my
Where you live.
bedroom and my co-founder lived in the same bedroom as me. So we had two beds in the same room and we would wake up and go sit at the same desk next to each other.
That's like a real lock-in because you
Literally
don't even have a
lock-in.
private life, right?
There's
Like
nothing.
there's not you have nothing.
Nothing. It's
You- it-
purely like there's one local bar that we went to once in Sunnyvale because there was nothing to do. But we would go outside and we'd throw the football.
Big
But-
skin.
The pigskin. We would go outside and get some sun and throw the football back and forth and then go back inside and just program. And my day was literally like wake up at noon and because you don't have any calls, wake up at noon, program until 4 a.m., fall asleep, do the same thing the next day, 7 days a week. And there was no alternative. And there's we were also in this weird, I mean, also I wasn't 28. I was 21 at the time.
It's funny because saying like I put in like three, like obviously respect
Yeah,
to Marty,
great.
but saying I
That's
put
good
in
work.
3 92-hour weeks is another way you could say like for the last 3 weeks I've slept and ate and done normal human things for about 12 hours a day.
Yeah.
And the other 12 hours I spent working.
Yeah.
It doesn't hit the same as three,
Yeah.
90.
It is wild. But I don't know. I mean, in general, like there was a time in Silicon Valley also that you could raise enough money that you could just immediately be on like a party circuit. And like clearly this is a step in the
Yeah.
right direction away from
Yeah.
that. It's like actually taking
Good.
business seriously. So
Good.
hugely bullish overall. It's just funny like thinking about like the money flowing. Like there were not that many companies that in 2012 that were raising like double-digit millions, but then there weren't that many companies making money. Like we certainly weren't. We had no users. So like who was going to fund us? Like $17,000 was the right amount of money to give us. Like, and also like, it's not like we were being recruited by big tech. Like if I tried to get
Yeah.
a job there, I'd be
You're
like,
like-
no.
The capital markets were efficient.
They were. Like it was like I didn't deserve more than 17K. I wasn't that experienced. Like I was just trying to, like do something, build a
Yeah,
website.
it is it's very real that like a lot of founders would benefit from like having their first fundraise be like $100,000, which
Totally.
is just enough for them to like hack for 2 years and
Yep.
not have to get a job.
Yep.
But the current state of the capital markets means that if you're like talented and charismatic and compelling and you have an interesting idea, you can get at least $1 million,
Yeah.
probably well beyond that.
Yeah.
You
It is
know, at demo day, like it was very obvious
Yeah.
for the most part when you could tell.
Yeah.
I pretty much was guessing every time. I was like, let me guess, your round's closed.
Closed, yeah.
Um,
I mean, yeah, in 2012, like I think there were probably like 5 or 10 teams that like raised solid rounds coming out of like an 80 team batch. Like it was not snap your fingers and the money shows up. The hottest, like most overheated round was done at like 60. And everyone was like, this is a bubble. Like, this is insane. There was one company.
well,
Most
what company
companies-
was that?
It was a company called Virule, and they were actually really good at viral videos. And they were great at video production, and they'd built an ad network and were doing sort of like some programmatic ads. So it was more like an ad business than like I don't think they ever fully stuck the landing on like becoming like a major platform. Like I don't think that they IPO'd or anything. I know the founder's done quite well and has I think a number of businesses, but They launched a few like extremely great launch videos. I feel like you could almost go back and credit them with like creating the original launch video. You should look up VIROOL, like launch video on YouTube. And
VIROOL.
Virul, yeah, VIROOL. And the whole idea was like they would get you to go viral, and so you would pay them, and then they
I
did
mean, it's
this
still
deal
a
with,
I mean, it's still.
it's still going, it's still cooking. Well, Alex Debilov, I believe, is the founder. Great guy.
Still have 50. LinkedIn says, I don't know. This company looks pretty dead.
Okay,
On
well,
LinkedIn.
but I mean,
Oh, it's now called. I guess it was a.
the founder, it was super young, and I met him in college, and it was just like he really was the type of person that you would want to fund at 60 because like he was making money in his dorm room, like hand over fist too. Like had actually scaled the ad network and was like bringing in real revenue and real profits. It was just maybe like it wasn't necessarily going to turn into like AdWords because he didn't have like a Google attached to the front of it. It's still like super impressive business, right? But they had worked with this video production company called Glass and Marker, which I wound up working with later, sort of like a precursor to Sandwich Video, a precursor to Jason Carmen production, and was particularly good at creating this like just super cinematic, like Hollywood level video production for like a launch video, and they put out a few that were really good. I remember they had like SWAT team going in, pulling in like this blue goo that was like radioactive, and it was like you got to get the formula to go viral. It was great. Are you throwing them on there? You're throwing them on there. Virul, VIROOL. Alex Debilov. If you want to come on the show and tell us the full story, hit me up. The moon, probably the moon. Well, they were going to the moon. Yeah. The other funny thing that I like is this. So like these teenagers that they interviewed, they said the brass ring is a $1 trillion company with a global user base. To grab it, they rarely drink, scoff at work-life balance, and are locked in a 24/7 competition to be or appear to be the most obsessed. There's a one framing which is like I don't drink because like it's like I've done the research and it's a carcinogen and it's bad for my health. There's another one which is like I don't drink because it's like sacrificing because like I care about work. Like for me and my friends is like we would drink every drop of alcohol that we could afford.
It was just not that much.
So we had like 3 beers a month because like that was what we could afford. And we did not, it was like, yeah, like if you're going to Costco and getting like a huge box of ramen, like it's going to be a consideration if you take the 30 rack in the bag. That's going to hurt your burn rate. When you're on $17,000 for 6 months, like an extra $30 in beer is like material.
Yeah.
It's a serious
Yeah, I
decision.
was hacking Chipotle, with the like double beans,
Yep.
double rice
Yep.
because it didn't add anything, and then
Yeah.
and then
You're not being like, yeah, throw a Corona in there with my meal at Chipotle. No way. But
I used to go to this will be funny to you now, but I used to go to the first like 20 trips I took to Erewhon. I didn't go in the building. I would just bring jugs of water to fill up in this thing outside. And I'd pull up with my car that had like 200,000 miles on it and just be like, carrying these huge jugs of water. Fun memories.
Here's the trade-off. Why would I go to drink at a bar if I can be building a company? I mean, it is the right trade-off, and it is the thing that you don't want to lose as the capital markets loosen, right? Like,
This is such a all the people that are screenshotting this article.
Yeah.
Why would I go drink at a bar if I could be building a company? That is a really
there is a little bit of this that's like the whole question the Wall Street Journal is clearly asking here is like
I don't even like I don't like
whatever?
bars and I don't like drinking, but this is still a funny quote.
Yeah. No, I understand what you're saying, and I understand what people are screenshotting it about. But the interesting thing is like if the money starts flowing in Silicon Valley, like the thing that you would definitely not want to lose is like the time in the office, like the time actually working. Like that's the worst thing to lose. And so even if you have to justify it in this like, psychological way, it's good not to lose that. Because as soon as you actually go to the bar every night, like you're definitely not building.
I was thinking like I've always felt I had, somewhat of a balanced life, right? We realistically we work like 60 hours a week, and that like we leave home at
Yeah,
somewhere around 5,
it's pretty balanced.
get home around 5:30, and then obviously working randomly on nights, weekends, etc. But I was thinking, people say like social life, work, like, family, like pick two.
Yeah.
And I realized recently, took me a while to realize like how much I sacrificed like my like social life, right? Because I feel like I have a social life at work, and
Yep.
I'm lucky that a lot of the people obviously consider every person on our team
Yeah.
a friend, and the people that I invest with are friends, and the people that I work with are friends. But yeah, you do have to. This is just this culture of like sacrifice everything, but the company works really well when you're 20, when you're in your early 20s, mid 20s, depending on when you.
I think we found the ultimate killer in this article. Hasab Ullah, he works out of Founders Inc., a waterfront campus in Fort Mason that provides desks, a hardware lab, game room, stage area for hackathons. He lives on one Uber Eats meal per day to save time and avoid cooking. Ullah pays $700 a month to live at a former office building that was converted to a living and workspace for about 20 residents. The beds, which are clustered in a common area, are fully enclosed pods. He literally lives in the pod, with a privacy curtain similar to a train sleeper car. With the curtain shut, his pod gets pitch black, letting him sleep days after working all night. This guy is a killer. I'm betting on him. I
An
like
absolute
this.
dog.
This is not a LARP. $700 a month is so little to live on in San Francisco. I assume that's where this is, Founders Inc., Fort Mason.
He's living in the pod.
He's living in the pod. He's locked in.
It is
the
funny. It is
ultimate
funny to
lock-in.
do.
Shout out to this guy.
You would think he could maybe eat 2 meals if he didn't do Uber Eats and he just walked to grab some food, but
Maybe
it's too locked in.
too locked in. Yeah, I think it's probably worth the trade-off. But yeah, I mean,
This is still. I gotta say, like, getting delivery is still an extreme luxury. Still a luxury.
Yeah.
Back, I would not when
we used to
when I would not let. I was like on a like once a week
Yeah.
like treat yourself to Chipotle type of thing,
Same
and
thing.
otherwise it was like, yeah, we have like
Yeah.
chicken breast and
Yeah.
rice at home.
Yeah. No. Totally.
Like,
No,
I'd be
there
in my
are
own head
cheaper
being
ways.
like,
There are cheaper ways than
the
even DoorDash.
quote, the meme of like your mom says you have XYZ at home, but that was like in my own head. I'd be
Yep.
like, I have food in the fridge. I'm not.
Totally.
I'd be guilty,
Yeah.
being ordering delivery.
No, I remember one night I was up like really late working. I boiled some water in a pot to make ramen. And I got sucked into a coding problem, and I let the water boil and evaporate, and it destroyed the pan. And it was like, that's our capex out the window. Like, we just devastating hit to depreciation. Like, we were expecting to depreciate that asset over 2 years, and now we have to buy another pan. Like, what are we going to do? We don't have a pan. Pans are expensive. Money doesn't grow on trees. We only have 17K. It's rough.
Kausas, the guy, the
Yeah.
original guy from Pylon, is on the Brian Johnson diet.
Okay.
So
Well, he's raised $51 million.
Yeah,
and,
so
and to be clear, I do think that like all of this is proportional. Like, if your business has grown to the point where you can raise 10 million or 50 million, like you do not need to be living in the pod
you don't need
anymore.
to-
Like,
you don't need
pay
to-
yourself a reasonable wage. As
Yeah.
soon as we raised real money and we're making real revenue, like we were in like decent apartments with cleaning and like with like.
And it's amazing to
and
feel like
need to.
you have like a relatively the lifestyle of like a corporate athlete,
Yeah.
or even just an entry level corporate athlete, but it still feels like a massive luxury.
100%.
Like
100%.
my
800 square feet in a
when I
yourself
first moved,
is
when I
amazing.
first moved to LA, I
Yeah.
had my apartment. It was a 2-bedroom apartment that I had a roommate. So I felt lucky to have my own room, but I had no windows in the room because the window opened up to like a common area
Okay.
at eye level. So if I didn't have like, I literally put cardboard up. If I didn't have cardboard up, people would just see into my bedroom. I was like,
Yeah.
And then
That's hilarious.
super dark. But this quote is hilarious. He said his ideal employee for a sales role at the startup is a quote unquote PhD, poor, hungry, and desperate.
I like that. That's good. You gotta get
grinders.
You gotta get grinders. People that want to be on the upswing, take risks.
Yeah,
grow.
there should be a term for somebody who fasts until their next like steak sales dinner. It's like they only eat
Oh,
when they're
celebrating
closing.
the gong.
I only eat when I'm closing, like a real hunter on the
This is
savannah.
pretty crazy. Nico Lockwoff, $25, 25 years old, wants to build $1 trillion company with the goal of replacing traditional insurance companies. His father is a lawyer from the insurance company. He said he only hires people willing to work 7 days a week. Of his 40 plus employees, around 30 are ex-founders. That is a crazy stat just because like it really speaks to the amount of founders that exist in the Bay Area now. Like you could not, I mean, this happened like, are you familiar with the Y scraper instead of the skyscraper? There was a, this is in maybe 2008, 2010. There was one building where all of the YC companies lived after they graduated from Mountain View and went to San Francisco. They called it the Y scraper. And there was enough of, so you have stories about like Coinbase working right next to the Airbnb guys. I don't know if that's exactly right, but like you could imagine a few different big companies coming.
Yeah.
And it was like, if one company failed, it would just be like, okay, come over to this company, like join forces. But you couldn't necessarily do that to the tune of 75% of the workforce in the first 40. That feels new, and it feels like an example of how
Totally.
how much more popular entrepreneurship is these days. It says he lives at the he lives at the office, Lakwa said, who considers himself the most hardcore of his peers. Employees share similar feelings. Though not a work requirement, Lakwa said 2/3 of our early employees got corgi tattoos. That is hardcore. Wow.
That's crazy.
I have no tattoos. I've never been big into that world, but that is certainly a commitment. Hopefully you own the IP. Like, do not need
So interesting.
to
So this
rebrand it.
company, I'm on Nico's LinkedIn, and
Mhm.
this is a stealth startup still.
Well, he's not.
So you're in the
They're getting tattoos.
you're in the
baby.
journal, and you're tatted up. I think you're safe to come out of stealth now.
Yeah. Hopefully you have the IP locked up. I went through YC with a company called Pair that was I think it was like an app for you and your significant other. And so it was, imagine a social network, basically all the features of iMessage. You know how now in iMessage you can like see all the photos that you've shared between you and one person. So I can pull up like our iMessage and I can go into that info panel and see like, here are all the links that Georgie sent. Here are all the images. I can send you little stickers and all sorts of different stuff. Pair was that for like a romantic couple. So you could like draw to each other, had all these like fun little games and stuff. And Pair wound up getting sued by Pair Networks. And they were like, whoa. Like, we are a consumer dating, like messaging app for like a husband and wife to share their life together. You're a networking company, Pair Networks. Like, you sell into data centers.
Yeah.
Like, why are you suing us? And they were like, no, you're a technology company. We're a technology company. You have to change your name.
Yeah.
And so they did, and they became couple, and it was like this huge difficult thing. So anyway, the importance of getting your name IP locked down before you get the tattoo.
We have an important name to add. So Senra's in the YouTube chat says, "Can we get Founders Podcast on the board?"
Oh, absolutely.
We didn't add you because this was so schizo.
Yeah, we don't want to indict you, but you are really the godfather of podcasting. Created the cat. I don't think we can see up there. I don't know. We'll have to see. We can't see you up there. You have a ton of space to your left though. So get down and keep going to the left past Vibe Coding and past Discord, to the left past Larry Ellison. That whole area, you got like 3 feet to work with over there. You can draw massive stuff. There we go. Here we go. Oh yeah, this is good. Going downwards. This is perfect. Okay. I'm seeing everything. We're good. Lockwell regrets getting his Columbia University degree, he said, because he wasn't solving societal problems in class. I always want to do the maximally ambitious thing I can think of and make the biggest impact possible. Yuan, the Corgi co-founder, said her life too centers around work, which across the startup scene is populated largely by men. From a personal perspective, I don't mind it as much, but it does suck to see not that many women in startups. Jared Friedman, partner at Y Combinator, said the work ethic and energy of of San Francisco's young founders feels like a return to the early days of the internet, and I agree with this. This is a great take. When people slept under their desks at companies such as PayPal, I actually see it coming as a full circle moment. AI is probably 10x as big. Friedman said the tech.
Yeah, I mean, it's
culture-
very helpful if you have, 5 to 10 other heavily funded companies in your category.
Yeah.
And so capital is not really a constraint for anyone.
Yeah.
And it just comes down to raw
Can
execution.
Do we just conference Senra in right now on this?
Yeah, we got to ask him about.
I got to call Senra and get him to tell us about the sleeping under your desk. Should I give him a call? Senra, let's see if he's available. I'm calling him. I'll put him up if he's available. He's in the YouTube chat, so hopefully he can come on the show. I totally emphasize. Hey, how you doing?
You're live.
Did you need to call me?
Yeah,
Yeah, you're live.
we saw you in the chat. And
We got
and
Nat Eliason
We're
in the
doing
chat.
we're doing
Happy
a
Friday,
whole-
Nat.
We're doing a whole deep dive on this Wall Street Journal article about the young founders in San Francisco who are working 12 hours a day, 6 days a week. There's a bunch of examples.
Yeah, so we
And-
wanted to ask you, is hard work important?
or is it overrated?
We wrote an article about people working part-time.
No,
working hard.
really hard. And
Working hard.
and the
being
article
focused on the
the
job.
article is framed as like are they working too hard a little bit, or like is this a LARP? Are they pretending? And we wanted to go to the source and get the final answer.
They do with the other.
That's what Jordy said.
That's what I said. It's like, put differently, they're spending 8 hours a day sleeping, 4 hours a day,
Doing whatever
working,
they want.
we're doing whatever they
Watch
want.
Netflix, I guess.
I'm like, what would our lives look like if we didn't have 5 kids,
It's crazy.
like, and wives that we
I don't know. Yeah.
love dearly?
Sorry, but that's part-time, buddy.
996 is part-time. Breaking. David Senra has called it. Working 996 is considered part-time in the Founders Podcast world. That's good.
Did you guys ever, Ruben, I know you're into like bodybuilding. Did you ever read The Education of a Bodybuilder by Arnold Schwarzenegger?
No, I should. Sounds fantastic.
Okay, so somebody posted like the Great Lock-In, and it's just like 9 episodes of Founders.
Yeah.
And
Oh,
one
I
of
saw
them,
that.
I think. So one of them, I think, is Arnold's. So Arnold wrote 2 autobiographies. One when he was a 70, which is fine.
Yeah.
But the way more extreme one he wrote when he was 30.
Oh, wow. That's young.
So the first half of it is really like 10-page biography, right?
Yeah.
Autobiography. And then the second half is like his workout routine, which is like another 100 pages. But basically he would, people were just like, yeah, I work 12 hours a day. He's like, so what else did you do with all the fucking time? It's like, you're
You
not
said
working
that.
enough.
Wow. Yeah. That's awesome.
I don't want to get kicked off stream, but he tells, so I'm going to do the PG version of this.
Mhm.
Like, this is before he made it to America, right?
Yeah.
So he would go to like him and his other bodybuilder friends.
Mhm.
They'd go to like this forest out in Austria or maybe in Germany, and they would bring a bunch of women and they'd bring a bunch of like beer and food, like schnitzel or whatever that is.
Schnitzel. Okay.
Yeah. And they would essentially like go out there, they'd strip off their clothes and they would like lift like tree trunks and like
Okay.
they'd swim in the
Lake or something.
in the lake, and they would just essentially just work out all day. I was like, this guy's incredibly extreme.
Work out all day.
Who's the hardest working founder purely by hours spent working on a single company that you've ever studied?
Elon probably, because if
Yeah.
the how Elon. Thanks for reading and covering that episode.
It was so good.
You guys did a good job on it.
It was
But
awesome.
so they actually had a really interesting conversation recently with somebody everybody knows who's been a founder for multiple decades, and he came up in the technology industry and he's been there forever.
Sure.
And I actually asked him that question. I was just like, who's the greatest like entrepreneur you ever dealt with or like you knew about? And he's like, listen, you might not like him, you might not like working with him, but it was undoubtedly, without hesitation, a young Bill Gates.
Young Bill Gates.
That would be my other answer if it wasn't Elon.
Yeah.
It's just from the time they started Microsoft in that little strip mall in Albuquerque, New Mexico.
Yep.
The guy, until he left the company, like I don't think he did a single other thing.
Do you
than
think the
about
Bill
Microsoft.
Gates hardcore founder mode era was defined by his ruthlessness with regard to deal making or actually the amount of hours he spent in the office? Like, have you heard stories about early Microsoft being this 996 culture, working 12, 13, 14 hours a day? Or was it strictly that when he went into every single negotiation, he was willing to do anything to win?
No, so like he's not working 12 hours a day. What
He's
he would
not.
do. So I'll give you a preview, okay?
Mm,
I'm the next episode
Yeah.
I'm working on right now is about a young Bill Gates.
Yeah.
The title has to be something with hardcore because
Sure.
it's his favorite word.
Yeah.
So he would work 36 hours straight until he couldn't literally stay awake, and then he'd just crash and sleep in his office for like a few hours and pop back up. And
That's
So
hardcore.
it's like
That's
That's
I don't
how
want to
fucking
hear about.
cool.
Oh, I got a good night's sleep. I'm a grinder, but I got a great night's sleep last night.
yeah. And so like there's a
Oh, you're a grinder. Let me see your sleep score.
better be in the single
It
digits.
better be in the single digits.
But let me tell you one of the funniest stories about Bill Gates. So the best book written about him it's called Hard Drive: Bill Gates and the Making of Microsoft Empire. So the same guys that wrote that, essentially it's a biography of the first 35 years of his life. Then it was so successful, they wrote a follow-up. The follow-up book is not good, but there is a story in the follow-up book that is one of my favorite Bill Gates stories of all time. And the thing I would say about Bill Gates is like he has a ruthless competitive drive that would terrify people. And so one of his main competitors is this French guy, I can't remember his name. They would they were going to war over and over again. And the only time they would like interact, they'd find themselves at the same like computer conferences. And so he sees Bill Gates sitting on a folding chair in the corner of this computer conference alone, looking at something. And remember, they're like head-to-head competitors. Now this guy's completely disappeared. And so he goes over and he wants to say hi to Bill. And then he walks up to him and he realizes that Bill's in the corner by himself, staring at a picture of the guy of his competitor.
Of his competitor. He's just obsessed with
like a picture of you.
Yeah. Next time I see you, I'm gonna make my profile picture when I call you your phone's background. Just remind you of me constantly.
If you hard drive, the way I described him in the first episode I made about him on episode like 40 a long time ago, is that Bill Gates is Genghis Khan in a Mr. Rogers costume.
Yeah. That's
wild.
wild.
What I think about him.
There's a few ways to read that.
That is that's hardcore. That is hardcore. Yeah. Well, thank you so much for giving us more context on what it means to be hardcore and grind in an entrepreneurship context. Hope you have a fantastic rest of your day.
Thanks for calling me, and I'm just going to say publicly what I said to you guys yesterday after seeing what you did in New York Stock Exchange. I'm super proud of you guys.
Thank you.
You're absolutely crushing it. I don't think you'd have any kind of limit at all. I'm very curious where you take this for the next 2 years.
Thank you.
Thanks, brother.
We'll catch up soon. See
Love you.
Bye.
And
always good to
back.
have a guest, even when you thought we weren't going to have a guest.
They said we couldn't do it. They said it was impossible.
Impossible when you just got two random mics in a conference room that you could have a guest on your show, but you can. Anyway, honestly, congrats to everyone who got mentioned in this article. I think there'll be some snarky takes. I think there'll be some supportive takes. Overall, it seems pretty high leverage to throw up a flag that says, hey, I'm working hard on my startup, get mentioned in the Wall Street Journal. They probably had to take, half an hour off to do a little phone call for this. And overall, probably pretty high leverage effort. So congrats to all the young grinders in San Francisco working 80-hour weeks. Good luck to you all. And congrats on your first Wall Street Journal mention.
First of many, hopefully.
And if you want to help grow your startup, get on ADIO, Customer Relationship Magic. ADIO is the AI native CRM that builds, scales, and grows your company to the next level. You can get started for free.
Did you see that Polymarket is getting offers at up to 10 billion?
Whoa. Polymarket is, of course, a sponsor. What is volume just going through the roof? Aren't most of Polymarket's metrics kind of public because you can just look at the chain, right?
Yeah, check
is
the
that
chain.
Driving
check
growth?
The chain.
That is.
I mean, they're about to be.
moment.
They're about to be launching their app in the US.
Yeah.
Everything to date has been international.
That is a big catalyst. Yeah.
So a lot
Yeah,
going on.
they're obviously duking it out with Kelshi, but it's great to see Shane on an absolute run and
Matt and the whole team.
put more put more put more cash in the coffers, more opportunity to build and scale the business. It's been a fantastic data source for us. Of course, Polymarket powers the ticker that you see on the show all 3 hours long every day, and it's been a source of insight for us through our entire partnership. So thank you to Polymarket for sponsoring us.
Yep.
Rehat has a funny screenshot. Says design is not just what it, and you can't really see it because
This is no way this is real.
Has to be fake. I think he's memeing some liquid glass nonsense and some poor design, mixing up the design. But he got 6K likes, potentially with the fake news. I don't know if this is real.
There's no way
There's no way this is real, right? Anyway, we'll leave
it's a good
viewer to
joke.
figure out.
It's a good joke. Sir.
Anyway, in other good news, Kaz over at Shopify, now open door, is replying to random posts on Twitter saying, email me. I'm still at Shopify until tomorrow. Here's my email. and Fod says, bro, this guy
absolute dog
grinding to the last minute. Love this level of dedication. Open doors all over the place. The stock's way up. It's become this meme stock that is fascinating because I was talking to Brandon about this with he was saying like there's something interesting about the Open Door story, that it is this like retail army driving a meme stock. The valuation is basically, I mean, Keith was actually steel manning it, saying that as a revenue multiple, it's not that crazy. It's in the same territory as some other big public companies. I think he cited Robinhood at 31x revenue or something like that. And so,
wait, what company?
So Open Door. He was saying that like Open Door is not disconnected from the financials if we can deliver on the growth and we can deliver on a revitalization plan, right? That was that was his pitch, and
Okay.
and so
but he wanted to fixate on the revenue multiple.
I think it was the revenue multiple.
Okay.
You can go and look at his reply, but basically, I don't think anyone disputes the fact that Open Door is trading very differently than it was trading last year. Last year, it was trading like a company that was in manager mode with a new CEO and had gotten kind of hit in the post-ZERP era and had not done particularly well across a couple quarters and was, I mean, the stock was, Jim Cramer would probably say the stock's in the dumps, but the stock is no longer in the dumps. It's been on an absolute tear. People have been making fortunes off of it. And the question is, what do they have to deliver? Well, they clearly have to go, they have to kick it into a completely different gear. And it's just exciting to see Kaz take the CEO role and be cut from a very different cloth. Like I've interacted with Kaz. He's been, I've actually emailed him at this email and he solved a problem for me on Shopify in like 2 seconds. He basically saved my business. So I mean, he's a remarkable operator.
Yeah, very
aligned
comp structure as well.
Totally.
Right? He's
Yeah.
really
All based on
only makes money
if the market
making
cap
salaries at like $1.
Yeah, exactly. And so people will debate the valuation. It's clearly trading on the back of a completely different narrative with a completely set of investors that are setting the valuation. It's now valued. It was valued very low. Now it's valued very richly. But it is interesting to see some real legit folks in Silicon Valley step in and say, hey, we're going to do the turnaround thing. You don't often see this. Most times when a VC incubates or backs a company and it gets out into the public markets and they're able to distribute the shares and they're able to sell their position down, if that company does not do well over the long term, they are looking for the next startup to go in and take a second run at that business, right? So if I'm not going to be able to think of a perfect example, but I mean, even just think about like the story of Square. Like Square was Keith Raboy as well, right? He was in that. It's like he wasn't saying like, okay, I sold PayPal. I need to get back into PayPal to do more fintech stuff. He was like, no, like I'm fine to do another startup. And there's a variety of stories where someone's taken a company, taken it to acquisition or taken it all the way to going public. And then the VCs and some of the entrepreneurs and some of the early employees say, hey, we still really like this. We like this industry. I mean, maybe the best example is Ramp and Paribus. Like Eric Lyman and Kareem Attia took a run at understanding like the financial credit, how people spend money, saving people's time and money on the consumer side with Paribus, sold the company. And we're like, there's more opportunity here. Let's keep going. And so I feel like that's the default playbook in Silicon Valley, is that once you've bet on an industry, you've bet on a category, and you've backed the right founders, you've gotten your return, you've returned capital to our LPs either through an IPO or an M&A process. You're not saying, let's go back into that same structure. Yeah. You're saying, let's start again. Let's start a new company. But this is an interesting twist in that you could imagine Kaz saying, hey, I've been at Shopify for a while. I want to start a real estate technology company. Yeah. And so Keith is going to write me a check. Khosla leading the Series A. I got a couple people that I've worked with before. No, he's coming into Open Door. He's actually turning it around. So it's a little bit different. Although the GameStop story was somewhat similar, because the CEO of GameStop had founded Chewy, I believe, and was a very successful entrepreneur. And it was a similar example of like someone. There was still a lot of questions about GameStop, like can they turn that company around? But the stock performance was obviously crazy. But it was not a purely financial person stepping into the role. It was an experienced CEO who built a real company at real scale. Yeah. Anyway, I don't know if you have more of a take on Open Door or Shopify or anything like that, but I've been
I'm excited to see what Kaz does.
Doing it in. It'll be interesting. How did you sleep last night? Did you get to catch up? We need the soundboard because I got a 92.
How did you pull that off?
I got a 92.
I guess you were way closer to the airport.
I got to bed really early. How's your sleep experience? I'm using an 8Sleep, by the way, 8sleep.com. 5-year warranty, 30-night risk-free trial, free returns, free shipping.
Only 6 hours and 27 minutes.
I'll leave a 5-star review for 8Sleep, the app. I love the app. It is fantastic.
I am currently
you're going into a big
I'm
weekend.
Currently ill. Yeah, I have the HRV of a dead person.
It's terrible. Well, lock in this weekend, get some sleep. We will be fortunately home later this evening. This was fun. iPhone Air bend test on Tom's guide. Icon says an Apple exec casually throwing their product across the room and not flinching at all when the host misses and it clanks off of the wooden table is insane. Apple is extremely confident in the durability.
I looked this one up. I looked this one up because I was like, again, it's like a parody account. It looks like looks like it's fake video, but it's a real video.
No, it's real. They're confident. Do you remember Bendgate? Do you remember this with the iPhone? I think it was the iPhone 6.
No.
It was the thinnest iPhone ever, and it got truly thin, like way thinner than this back then. They were thin maxing. So they were width minning. I don't know. Is that the right word? They went super thin, and the problem was that if you applied a little bit of pressure, you could actually bend it and break it like pretty easily. Like you could do this, and it would bend.
Now it's titanium.
And now it's titanium. It's thicker. There's more structural support inside. But the question with the iPhone Air was obviously like, hey, you're back to being super thin. Is this thing going to bend? And they just toss it across the conference room, and the host tries to bend it, and he's unsuccessful. And I think they figured it out. Anyway, they probably designed it in a Avengers-themed office. Did you see this article in the Wall Street Journal's Mansion section today?
Of course I did.
$4.4 million renovation helped one Winnipeg couple turn their 12,000 square foot home into an experience and a story. The Wall Street Journal says, an Avengers office and a Frank Sinatra garage. They built their own Disneyland. I love this. I love when people go crazy with the renos and make the homes their own. Some Disney fanatics get their fix by visiting theme parks. Tech entrepreneur Jeff Fetz and his husband Chris Fetz wanted to live in their own Magic Kingdom. The setting for their dream home, a 12,000 square foot traditional style home built in 2009 in the Tuxedo area of Winnipeg.
We gotta
What is
we
that?
gotta ask you. I'm gonna text Jeremy right now. What's
What is
the
the
what's
tuxedo
the
area of Winnipeg? And so here he is standing next to what looks like a very fancy luxury car with the biggest Cartier Santos on his wrist, I believe. He is an absolutely beast of a watch. If you want a Cartier Santos, head over to getbezel.com. Your Bezel concierge is available now to source you any watch on the planet. Seriously, any watch.
such a good
So
transition?
they bought the brick, stucco, and limestone house for around 4 million in 2029. Then they spend 4.4 million in a 3-year renovation
Double it.
to actually upgrade the house. We wanted to elevate the design to the level of fantasy. Chris, who was a full-time cast member,
What?
dancer, and parade performer at Walt Disney World Resort.
Wait, is he just is this like extremely
Crazy,
lucrative? Is
crazy.
it?
No. So the his husband. So there's Chris, and then there's also Jeff, and Jeff that's has a startup. Has a business that does actually customer service, and has become very successful from that. He co-founded a customer service tech startup now called InTouch CX. After 7 years, they moved to Winnipeg to be closer to the family. They met in 1997, so they've been together almost, 20 years? They were both students at the University of South Florida, and they figured it out. They have some crazy, crazy stuff going on here. Let's read about the
This shot of the cars in this
yeah,
entryway
the
is
cars on the
insane.
inside. I mean, this Art Deco stuff is wild. We wanted each room to be experiential. Who grew up going to Disneyland and would regularly go to Chris's shows when they were first dating. The Garage Mahal, as the couple have dubbed it, is a garage that was renovated as a shrine to Frank Sinatra.
Wow.
It houses a peacock blue Rolls-Royce Silver Shadow sedan that Sinatra bought as a wedding present to his wife Barbara, which Chris won in an auction. The Jazzy Room with lacquered wood paneling, oversized backlit frame photos of Frank and Barbara, and a curved blue sofa is where Chris hangs out, listening only to Sinatra records and drinking cocktails with friends. It's way sexier than a man cave. It's crazy. Jeff's downstairs office is nicknamed Avengers Headquarters, and the windowless room has the feel of a spaceship. To enter, you touch a panel, and a pocket door swooshes open like in Star Trek. There's a long metal mission control station, aka desk. The walls are clad with stainless steel and covered with television monitors and Avengers logos. And there's a room to store much of Jeff's 40,000 comic books. On display is a full-size Iron Man costume. It makes me feel very in touch with my childhood. They call one of the bathrooms the spa. And the story goes on. You can read it in the journal. But what a wild house! You love when someone makes it big and just blows it all on a crazy reno.
I texted Jeremy.
What did Jeremy say?
Said
We give him a
aesthetic
thumbs?
for their dream, a 12,000 square foot traditional style home built in 2009 in the Tuxedo area of Winnipeg. I said tuxedo area question mark. He said enforced by law. Actually,
Enforced by law.
do not go to the tuxedo area of Winnipeg without wearing a tuxedo. You will be taken into custody.
Anyway, let's move back to the timeline. Nader Khalil says, friendly reminder that multiplying revenue by 12 is not ARR.
It says a lot that this goes viral in the year 2025.
For sure.
2.2
Yeah.
over 2,000 likes.
Yeah.
What about Harry's asking the important questions? What about multiplying daily revenue by 365?
No,
right? If you've got lumpy revenue,
the hour that you processed your biggest invoice and then multiply that
by the number of hours in a year.
I've multiplied by 24. Then you have your hourly.
Actually, taking a step further to find the exact minute that you got the largest payment ever, and multiply that by 60, and then by 24, and then by 365, and that is
right math to do.
And that is the way to think about minute.
We just had our biggest minute ever. Like people talk about their quarterly earnings.
We just had our biggest minute ever.
It put us on a $20 trillion.
Here's the proof. Here's the Stripe dashboard.
Here's
exactly what. Here's the exact minute the payment.
Well,
hit.
if you want to bet on some companies that are subject to GAAP regulations and need to actually deliver
real ARR
in quarterly reports that are SEC regulated. Head over to public.com. Investing, for those that take it seriously, multi-asset investing, industry-leading yields. They're trusted by millions, folks. Public.com. Also, Emily Sundberg, breaking news. She has commissioned Donald Boat's work. Do you want to know?
This is a
This is from Donald
crossover
Boat.
I
This
was
is a
not
crossover.
expecting.
Do you want to know the very first sensation I felt while attempting to eat this? Spasm. My jaw cramped, an inward violent shaking. I cried out in pain. Burgers shouldn't be this tall. That was instant divine comeuppance. I was punished from above for even trying to place it in my mouth, says Donald Boat. So I'm interested to see what Donald Boat does. Obviously, he's a very creative mind, very schizo. He's mastered, like, we have this schizo red string diagram behind us, but Donald Boat takes it to a completely different level with his collages, which I've enjoyed. He's done some fantastic posting. Morning Brew has a story. Yesterday, Larry Ellison's fortune grew by $100 billion, and today, Larry Ellison's son, his media conglomerate, is getting ready to buy Warner Brothers. Normal family things. These two, this father-son duo is on a generational run. You'd love to see it. He is running around, acquiring companies, becoming a media mogul. Pretty fun.
Crazy.
I actually have not dug into what's going on with Warner Brothers, what's going on with just Discovery. I know that there's like the merger and the free press is involved somehow. I'm hoping we can get Barry Weiss on the show at some point to kind of break it all down for us, because
Warner Bros is up
new,
up 53%
pretty
in
new
the
to the
past
media
5
landscape.
days.
Yeah.
Um,
I do think it's interesting that at least in the dot-com boom, like the primary investment bank desk that would watch tech companies would also watch telecom companies and also media companies, tech, media, telecom. Like if you went to Goldman Sachs and you wanted to analyze what we think of as like pure technology companies, you would be TMT, tech, media, and technology.
Yeah.
And it's because they all have very similar zero marginal cost business models.
Yeah.
So if you create Mickey Mouse, or you own a telephone line, or you have a website and you're selling SaaS, those are all financially modeled somewhat similarly. And so it made sense to put them all under the same coverage group. Of course, now like there's a dedicated desk just for semiconductors and just for, social apps and just for SaaS and just for enterprise. Anyway.
Imagine being able to run around buying companies knowing that you have the full backing of your father, but you're buying company. I mean, Warner Bros is worth 46 billion.
That's a lot more than I would have guessed. Wow.
Is preparing a majority cash bid, meaning that like they're going to put up at least.
Ellison's into debt. I feel like he's not afraid to lever up.
He's not afraid.
Maybe that'll happen at some point. But yeah, put the cash together, get the company. I don't know. It'd be cool. I feel like I've never met Larry Ellison's son, but I feel like I would trust him to make the next Superman and Batman film. And Warner Brothers owns the DC universe, I believe. And I feel like he would have good instincts. I'm also excited about the Jeff Bezos James Bond. I feel like it's going to be good. I don't know. I know you know nothing about movies. So
who's going to be Mr. Bond?
I have no idea. But I just I think a lot of the true James Bond fans are worried about this idea that now that Amazon owns the rights to James Bond, they're going to like franchise it like they did with Star Wars. So there'll be like a James Bond show and a James Bond kids show. Like if you see Star Wars, it used to just be like, there's 3 great movies, then there's 3 prequels. And then Disney was like, let's do 3 sequels and then 2 extra movies. And then a spin-off show. Like there's probably 6 or 7 different shows for The Mandalorian and the Boba Fett and all the different spin-offs. And then there's kids versions. I think that's kind of fine.
Yeah,
I think Star Wars has been kind of like there's like some mediocre stuff in there, but like you can just not watch it. And overall, there's enough to pull off the shelf. So like if you want to watch something with a 4-year-old, you can. If you want to watch something with an 8-year-old, you can. You can get into the original. The original trilogy still exists there. Like you can still watch it. So like I don't know. I've been happy with that. I would be happy with more James Bond content. Let Bezos cook on Bond, in my opinion.
It's so funny people being like, oh, they're going to spend 200 million on the free press. Meanwhile, it's like such a rounding error when you talk about
Yeah,
like the
exactly.
totality of deals that they're looking at doing.
Yeah.
They're looking at buying a $50 billion
It's
public
like Barry,
company
Barry
with,
Weiss is
with
alive
majority
there.
cash,
Yeah.
and you want to turn around these assets and improve them.
Yep.
And you need great talent. And if you
Yeah.
got to spend a couple $100 million to get somebody to
I think I think it makes a ton of sense if you're just thinking about it through like those Mark Zuckerberg mindset of like, who do I want around the table right now? I want a bunch of great people who are entrepreneurial, who are, super connected, live players who really care about this stuff. Yeah, you got to go spend some money to get them, but it's going to work out. Anyway, apparently there's a company called Math Inc. And Will
if
Brown
they
says
really
they
do you
have
think
a
they actually
hiring
got
page.
do you think they actually got Math Inc?
I don't know. Maybe
Like, because these aren't
Mathematics Inc.
there's a certain flex to getting. I mean, you can get the domain.
Christian says, excited to share that I'm starting a new company dedicated to the creation of verified superintelligence via auto formalization. So is this a competitor to um, Vlad's thing? Building on the amazing RL infrastructure that we developed at Morph Labs, Mathematics Inc. has already achieved a breakthrough result. And their hiring page says, we call a date a square if all its components, day, month, year, are perfect squares. I was born in the last millennium, and my next birthday will be the last square date in my life. So there's a very hard math problem here, and you just have to, in order to apply for their jobs, you have to solve a math problem. So
That's really
I don't know. You want a job and you're good. Also, I feel like this is an odd question because I feel like if you copy this and you ask it like of a frontier model, like it's gonna
that's the whole.
one-shot it, right?
Imagine that's the whole point. I doubt it. Do you think it can?
We should try it.
If it would.
Pretty. I mean, I have yet to see like a hard math problem out there that hasn't been pretty easily one shot by most of the like this type of like concise question is typically handled by a frontier model with reasoning. Maybe not, but we'll see. More importantly, a video game entrepreneur has just paid $31.5 million for an oceanfront Hamptons home. You got Hamptons up on the board, connected to Patek. The deal marks the latest in a string of luxury transactions of the busy East End market. So, Karch, this is Matthew Karch. It's a circa 1970s home in East Hampton. He's the co-founder of Saber Interactive, a video game developer and publisher. And I dug into them, and they do a lot of porting and platforming. So a game will be put out by one publisher, and they'll say like, we would love to get this Xbox game on Nintendo Switch, and Matthew Karch will pick up the phone and say, my team would love to do that. We will do the hard work of making sure your game works on the Nintendo hardware or over here. And they do a lot of other stuff, but he has some great video games in the portfolio, and obviously it's provided for a wonderful life. And he is now in the position where he can buy a $31 million home. He's also, I believe he sold the company, and the company changed hands again. So it's unclear exactly who owns what, but it's a cool story. And now he has a wonderful, stunning house. The house literally sits on top of the ocean. The property is so amazing that I wanted to buy it and figure out the details later, he said. So he's talking to the Journal. You'd love to see it. If the Journal calls you about your home, you got to pick up the phone. The seller, an entity linked to Norman and Helene Stark, bought the estate for $4.7 million in 1994. The property first hit the market in 2017 for $75 million. Wow, that's high. It had been off the market for years. The most recent asking price was $39 million. Property contains 5 bedrooms, roughly 7,000 square feet main house, as well as a guest house, tennis court, and pool. The Hamptons real estate market, like those in many vacation destinations, soared during the pandemic, but the number of Hamptons sales hit a 14-year low in 2024 amid tight inventory and rising mortgage rates. And there's an interesting dynamic where renting a house in the Hamptons is like a massive multiple of what it costs to pay the mortgage on a house, because people really only want to be there in the summer. They don't necessarily want to buy or live there. So there's the kind of an odd disconnect between the rental and purchase market where you might not see that in LA.
Yeah, at the same time, I don't think it necessarily maths out to buy a Hamptons house right now and just rent it in the summer,
Totally.
just given where rates are.
Yeah. Makes sense. In the second quarter of 2025, there were 26 home sales in the Hamptons at or over $10 million, compared with 22 in the second quarter of 2024 and 6 in the second quarter of 2023. 2023 was really slow. Karch also owns 2 properties in nearby Sag Harbor that he uses for vacations. He's considering selling one of them. Anyway,
Love it.
another
Keep a couple
exciting,
homes nearby.
deal. There's a Series A financing for a new company that just came out of stealth, Brain Company. We saw Math Company. Now there's Brain Company. Brain Company emerges
New
from
meta.
stealth today. We're getting somewhere. We're seeing a trend. I like it. Brain Company emerges from stealth today, and we are announcing our $30 million Series A, led by Elad Gil and Jared Kushner's Affinity Partners. Brain Company provides an AI platform and applications for the world's largest and most important.
We were getting this company.
What?
Did we?
Yeah, we were connected. I believe we'll hopefully have the founder on soon. Elad Gil's also coming on the show soon, so we can talk to him about this. So go check it out if you're looking to get in early, go work there potentially.
Meanwhile,
Elad
the Profound team
Yeah.
is using out-of-home advertising to try to find an office in Union Square,
Yeah.
driving around an advertising truck,
truck.
a box truck, trying to find their
I
next
think that they
office.
should scale this campaign. They should get on AdQuick. Out-of-home advertising made easy and measurable. Say goodbye to the headaches of out-of-home advertising. Only AdQuick combines technology, out-of-home expertise, and data to enable efficient, seamless ad buying across the globe. I mean, seriously, they should put some of their testimonials or like case studies on like billboards and airports. Like that makes a ton of sense. If you're just like a general business and you're interested in getting your brand mentioned on ChatGPT, just flashing the Profound name in front of people, that's pretty high value.
Powerful.
Anyway, did you see the knockoff Bugatti?
I did not,
This is
but this is offensive to my.
this is extremely offensive to Bugatti's Italian. Wait, Bugatti is an interesting company, right? Because they're like it's German, but then they have their manufacturing plant is like on the border, and it's like changed hands a few times or something. But anyway, most people know the Bugatti Veyron, Chiron, but
So it's
Dream
German and
Tech
then French,
is a top. Yeah, that's right. It changed hands. Is
but
a
then it was
top
acquired by an
vacuum
Italian.
/ home cleaning robot maker, and it's showcasing the photo of its first car, a Bugatti-like luxury battery electric vehicle. So it's a
Is this
electric
Dream?
Bugatti.
Is this a Chinese company?
It is so Tior Taxes says a vacuum cleaner robot company founded in 2017.
Wow, they're literally a Dyson knockoff.
They're a Dyson knockoff.
That's
now
now
they're
knocking
Bugatti
off.
Valued at $3 billion, is making a luxury EV now. Apple gave up after 10 years of trying,
This is
burning
so-
$10 billion and
This is
employing
so
more
offensive
people.
in my culture.
I know, it's crazy how much it looks like a Bugatti.
I mean,
And, like,
it wasn't even.
It even has like a
They're-
rear diffuser on the back.
Well, yeah. So they're knocking off like the Veyron, but then also the new one, which
Tourbillon? Yeah, the Tourbillon's the latest one. Although, are you talking about some of the one-offs? Because
there was a one-off that looks.
they've done like convertibles, but there's only I believe there's only 3 major platforms. There's
It's
the Veyron.
Solitaire. The Solitaire
yeah.
is there. So this knockoff is using the front end of the Solitaire.
Yep.
I
And then
mean,
the
it's
back end
basically
of the Veyron.
it's closer to it,
to
just like a Solitaire knockoff.
Yeah.
Really, really dark. Never do this. If you're running Dream Tech,
Stop.
contact your lawyer
Don't.
and
Please don't. You'll be hearing
work
from
with
us.
them to wind down the company.
Please.
Just shut it down, close up shop. You guys had a good run. You're out of ideas, and just close it up.
How do you think this sells? I mean, China's knocked off the Taycan successfully. They've knocked off a few other cars successfully. I wonder what the
Yeah, I do think
Yeah.
the humor here is that they will probably make a pretty solid car,
Yep.
and it will cost like they can start selling
Really?
Bugattis for a couple $100,000.
$15,000 probably.
Yes.
Can you imagine?
No, but like you could imagine they sell this for like
It's probably
a
like
couple $100,000.
150 or something, which is wild.
And then I could see this making it into America where somebody's like, wait, I can
This is not
drive.
gonna make it to America. This will get caught at the ports for sure.
You mean like
Yeah, IP, trade dress, like
Yeah.
it'll be easy to lock this up. It's not making it to America. But people will be driving around in China. I mean, I've heard about fully counterfeit cars before. Like
Yeah.
in China, they have the ability to set up like it's a G-Wagon factory and it makes cars that look like G-Wagons and
That are bad.
and badged. Everything is trying to be as perfect as possible, a true knockoff. And then
it's
sometimes they work
interesting,
their way
they-
to other
they-
countries. You take it in the dealer and they're like, we can't work on this engine. This is not a Mercedes engine.
Well, yeah, and the reason that knockoff cars are not as big as knockoff watches is like there's no regulatory framework for watches, right?
Yep,
You're not
exactly.
going to hurt someone else by driving,
Yep.
wearing a fake Rolex
Yep,
or whatever.
Yep.
This was big. This was big. Two of the Cluely founding team have broken off.
Pretty
And
crazy.
I guess they're doing running the same playbook.
Yep. Driss says life update left Cluely to start our own thing. Already at 1.2 million ARR, 7 days in stealth. Had no idea making money was this easy. Announcement soon. Instinct Inc. This post is fascinating. Fascinating because doesn't say what the business is. 1.2 million ARR. What is the subscriptions of some sort?
It's written to
And then it's
written
like-
to trigger.
It's bait. Yeah. Had no idea
Not
making
falling
money
for
was
it.
this easy. Yes, you did have an idea that making
Because
money
you were
was this
saying
easy.
that at
You said that at
Cluely.
Cluely. You said making money was easy. I know how easy money is, but here we are talking about it anyway.
It worked.
Good luck to
You
them.
baited
on their
us.
next-
You baited us. No, but yeah, wishing them luck. And I wonder if they will start beefing with their former employer to
From
We'll get-
from a WWE perspective, that is going to be unmissable content. If they are constantly chirping at each other and fighting and going on podcasts and debating each other and taking shots and running adversarial billboard ads against each other, like there is a world where that generates more views than anything they've done before. That might be the final state of startup media and marketing. The real question is like, does this say something about like whether or not Cluely has hit product market fit? We demoed the product. We were not very sticky. Tyler, it seemed like he enjoyed the product and thought there were some glimmers of hope, but he
But not really
he
the
did not
target-
become a
not
daily
really the
user.
audience.
Well, when we talked to Roy, it wasn't clear who the target audience was. It was maybe the college kid who wanted to cheat on an exam, or you want to cheat on an interview, but then that was probably illegal and risky, so you don't want to do that. Then there was like maybe enterprise sales. Then Roy was talking about brain computer interfaces and VR, and so like there were just like a bunch of different ideas. Clearly throwing spaghetti against the wall, unclear what was sticking. And so I am interested to see what Instinct Inc. winds up building. And I'm wondering if they have done more work to make sure that they're building on top of a solid foundation, because the big question that was looming around Cluely was just masterful marketing, lots of clearly breaking through the noise, cutting through the noise, getting downloads. But was it a leaky bucket? And so has this team, now that they're on their own, have they built a less leaky bucket with this? Because what happens if you stop going viral? Does that $1.2 million in ARR turn into nothing over 14 days because everyone unsubscribes? Who knows?
Yeah.
Anyway,
I would go out and guess that they're just starting a creative agency, which would probably make a lot of money really fast.
I think so.
So
That would make a lot of sense. Anyway,
25.
find your happy
Find
place.
your happy place.
Book a Wander with inspired
Find it.
reviews, hotel grade amenities, dreamy beds, top tier cleaning, and 24/7 concierge service. It's a vacation home, but better, folks. We will close out with this. 25 years ago, there was an article in the newspaper, in the Daily Mail, Tuesday, December 5th, 2000. Internet, quote, may just be a passing fad as millions give up on it. And of course, recontextualized, Max, the VC, is obviously drawing a comparison to the AI narrative. I don't know if anyone's gone out and actually said AI is a passing fad. People have kind of said like, maybe we're over our skis on CapEx, or maybe we're over our skis on enterprise value.
Or maybe the promises are too grand.
Yeah, maybe we're not getting ASI tomorrow.
Yeah, 2027.
But I don't think anyone is out there really saying, yeah, in 10 years, like we're not going to be chatting with LLMs.
It's so funny
on the phone.
to try to, I mean, it's very difficult to like this article is especially funny because internet may just be a passing fad as millions give up on it. It's like, well, are those millions of people benefiting from other people using the internet? If so, then like
Yeah.
it's
This is
has enduring value.
crazy. Researchers found that millions were turning their back on the World Wide Web, frustrated by its limitations and unwilling to pay high access charges. They say that email, far
like-
from replacing other forms of communication, is adding to an overload of information. Experts from the Virtual Society Project, which published the report, say predictions that the internet would revolutionize the way society works have proved wildly inaccurate. Many teenagers are using the internet less now than previously, they conclude. James Chapman, I would love to know where James Chapman is now. He was a science correspondent at the Daily Mail. And it's interesting. I mean, you can't really say like he got this wrong because he's just publishing the facts, which is like these researchers found this data point and kind of leaving it up to your interpretation. But
yeah, and that's like all these articles come out like AI adoption in the enterprise is dropping.
Yeah.
Or what was the MIT report? Like 95% of Gen AI pilots are
I mean, that meter report was like the most bearish take on Cursor possible because it was like Cursor is slowing people down. That was like the basic read.
And yet demand.
But you dug into it, and there was a lot of different ways that it could actually speed you up in certain contexts, in certain.
Well, yeah, and if you just
and then also the product's just getting better.
Just look at the demand for Cursor.
Yeah, incredible.
Apparently Cursor in the secondary market is trading closer to 30 billion than 20.
That's up there, man. That's up there. It's great though.
Incredible time to be alive.
Incredible time to be alive. Well, thank you for tuning in to our remote live stream today. We will see you.
We did it. They said it was impossible.
They said it was
proved them
impossible.
wrong. And next week, got some travel in the middle of the week, but we will be back in the Ultradome Monday and Tuesday. Very excited. And get out there this weekend and touch grass, be with your loved ones. Log off. Yeah. I'm excited to log off.
Excited to log off.
I think Charlie would.
Why don't you do the same thing?
Was known for logging off from Friday night to Saturday, and will be doing my best to do the same. And
thank you so much for tuning in.
Thanks for tuning in this week.
We'll see you Monday. Goodbye.
Love you.